see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show. Yes, we are indeed. We are live.
Crypto winter's over, guys. I talked to my fellow quant.
Andy, you just hit the button to run the Frax ad. Frax. Today's episode is brought to you by Frax, Open State Border.
Yes, sir.
Compliant
Today's
and
episode
compatible. Shout out to our friends over at Frax. It is a stable coin summer.
Yes, sir. Today's episode is presented by Plume. Let's give Plume some love, guys. These guys are smashing it. We're at the nest, the tokenization tower, where finance and digital assets converge. Ladies and gentlemen, I am coming out on a limb here and saying that my gut is saying crypto winter might be over. Also talked to my quant, a well-known figure in the space. He told me that he thinks Canton is going to outperform Hyperliquid in the coming months. Didn't quite get into why, but if there is a hated rally, it could be the Canton Network hated rally. Rob, what's going on, man?
I'll just comment on that and say that I think Canton is part of this next cohort of L1s. I'm not saying I'm bullish or bearish on these. Actually, in the long run,
Yeah.
my anti-Logan Yastrzemski thesis is that Ethereum is still alive and actually still very much cooking on volume activity. This thing is not dead in the slightest.
Guys, bullish ETH. Let's give you some love, man.
However, there are several L1s that are being built. Canton is one of them. They are part of the consortium chains. This pops up every bear market.
Yep.
The next cohort is with bigger brands than ever before. New York Stock Exchange.
Every time,
NASDAQ.
right? Every time since 2018.
There's new L1s that come up every bear market, and then it takes an absolutely tremendous Ethereum rally that kind of brings everyone back to the promised land. They realize that no one wants to build on anyone else's infrastructure, and the biggest value proposition is connecting disparate ledgers. I'm sorry, but is there
guys been DCAing ETH clearly?
Is there a better chain
Clearly
in a position to connect these disparate economies, these ledgers that have been currently just floating? Who cares? 24/7. Who cares? I want NASDAQ connected to New York Stock Exchange, connected to Robinhood. That's what I want.
Man.
That's the thesis. And there's only one chain in position to do that. It's not Canton, but I could see Canton getting a hated rally.
Man, I gotta say, some of our clips are starting to create discourse across the media landscape. For example, Austin Campbell at DAS was really pissing people off with his takes around permissioned permissionlessness, RWAs, and smart contracts, as well as a couple others that I've seen. So keep it up, Rob. We're making some waves. All right, guys, let's get into today's topics. We got a busy stream today. We got 2 guests in the tower, 1 guest at home calling in. We got the EasyA guys. They're going to be calling in. We're going to have some fun with those guys. Those guys are XRP bulls to the max. We're going to talk to them about XRP Chainlink. We're going to talk to them about, this exact thesis, Rob, this kind of Ethereum, Canton, Ripple acquisition thesis. We got markets and weather from New York. Then we've got the Ascii Ventures co-founder, Brian Wong. Guy has a lot of experience raising capital, investing capital. He's going to come in the tower. And then no other than Seraphim. I wonder what color Seraphim's hair is going to be today. You never know. I've seen him like 5 times and it's different color every single time. Today's topics are powered by Trezor. Let's give Trezor some love, man. These guys are amazing. Best hardware wallet on the market, Trezor.io, code Rollup10. That's our topics for today, Rob.
Not much else to add on topics. Shout out to Trezor, best hardware wallet in the game. Let's kick it over to weather.
Yes, sir. Before we do, let me tell you about our lovely friends at Frax. Frax is building the infrastructure for digital money. Visit frax.finance to learn more about what Frax is doing. It looks like the relief rally was fading a bit. It's 46 degrees here in the tokenization tower, a little bit windy, sunny days, a little chilly, powered by Relay, our friends, relay.link. Some of the best cross-chain swaps in the digital asset space across all public blockchains. None of these permission blockchains are going to be part of this composable thesis, are they, Rob?
Look, I certainly think that these things are going to want to compose with one another, but we heard how important low latency composability is with the trading thesis. It's important to connect all of these disparate chains. One day, I truly do have faith, one day these chains will figure it out, that we ultimately need one ledger, one global internet computer of sorts, internet of value.
Oh, he's bullish ICP, ladies and gentlemen.
No.
No. Not bullish ICP.
I'm not bullish ICP. That sounds like a question for Dom and Phil. Guys, let's keep it moving here. Shout out to our friends at Relay connecting all these disparate chains.
Oh my
What else?
goodness.
What else? The market.
Guys, market's looking good today.
Might be the first day that we actually have a little bit. We have some green and we have some red. But
yeah,
overall, I think this is just a timing thing because yesterday, we were on the downslope and we ended up picking up and now reversing trend. Markets are so dependent on the macro.
100%.
I think Israel's Netanyahu said that they are going to have direct negotiations with Lebanon.
Nice.
That is a step in the right direction for macro, and we're rebounding as a result. Look, markets powered by Zama. Privacy is just increasingly important. I think we're going to see we're going to see Zama, we're going to see Zcash all continue to bounce hard off the lows. These are some of the projects that we're seeing have the strongest rallies. Ultimately, this thing is all macro. What is your thesis as to why the crypto winter has ended and we are entering a new era?
Yeah, I mean, so just some quick macro stuff. Oil back above 100 or close to it after Hormuz was closed, then opened, then closed. Stock's very strong. I mean, it's kind of this whipsaw market right now. Oh, we're all good. Are we all good? Markets don't really seem to care, which is pretty cool. Now we're, one day it's like, oh, okay, we're going to be back in kind of like a deflationary regime. Inflation's going to come down. Everything's going to be all right. And then the next day we have, oil ripping, people being worried about the inflationary effects of oil. Today, we also saw Fed Chair Jerome Powell come out and announce that he will be stepping down after his term and he will be resigning. That is official now. I think that's something that the market is not really picking up on. Yeah, I mean, look, I'm still riding my uranium and copper, got my hype, got my Bitcoin, and waiting to allocate to more of these neo-finance assets once we get our feet under us in the market. With regards to the entire winter being over, our friend Raoul Pal put out a tweet who's been absolutely berated on for the last, I don't know, several months. He's been bullish, even though after he had a lovely podcast with our friend Chris Berniski, he still was bullish, even though Chris was bearish. That was around November. Raoul tweeted, total global liquidity rising, global M2 rising, US total liquidity rising, US M2 rising, China total liquidity is rising, and ISM is rising. Try not to overthink it. I quote tweeted that, agreed, said basically like, look, we're in a part of the market now where we're getting a new Fed chair. We have the best macro environment economically, not necessarily in terms of the war, but economically with the amount of liquidity in the system. Plus, we're in an interest rate declining environment. I expect that to continue. Secretary of the Treasury, Scott Bessent came out and said rates need to go lower. And so I think all these factors are coming together with what Raul's saying. We got the DAP blood. We got a lot of the tourists out. I think the 4-year cycle, people are still thinking about the 4-year cycle in terms of like, wait till Q4, allocate, year of sideways from there. Then we go up. I think people are going to get caught off guard. The sideways accumulation process that we're seeing right now across the market looks pretty significant. And a lovely signal of mine, CL207, posted a photo of a cat and a big green button yesterday. That kind of did it for me. So yeah, I mean, look, guys, I think there's a possibility that the bottom is in. It is hard to call these bottoms. A wise friend of mine calls bear markets like a big beach ball that kind of goes under, bounces back, goes down more, bounces up. It's very hard to tell when the bottom is. Obviously, hindsight's 2020. I think we have the best chance that we've seen since 1010 today. And yeah, I'm feeling more positive about where the general stock market's headed and more so. Anyway, Rob, look, man, Andy, that's where I'm at.
I love you, but I think you said a lot of words without saying a whole lot. I think
it's possibly the bottom.
I think you said oil went up and then it went down. You said the strait was open, then it was closed.
That's because that's what's been happening.
And then it was bad.
That's what's been happening. It's
bear
like
markets bounce up, then they bounce down. You said these things go which way? Up, down, sideways. They go every way.
That's exactly what happens.
Oh my goodness.
I mean, hey, that's where we're at. All right.
I mean, look,
I think there's a possibility that the crypto market winter is over. It's a possibility.
There you go. All right.
There's always a possibility.
You heard it. You heard it here first. Markets go up and they go down.
Shout out to Zama powering encrypted transactions, encrypted assets on chain. Let's move on to the news. Before we do, let me tell you quickly about Near, our AI partner on the show. Guys, we have a lot of news to cover as well today. And Near is our blockchain partner designed for AI native applications and autonomous agents. They are doing a lot of really cool stuff on the OpenClaw front with their IronClaw as well. Start developing today at near.org. All right, guys, let's get into it. We had some cool news from Securitize, officially partnering with the Currency Group to tokenize their shares on Ethereum and Solana. Quick video here. Pretty cool video.
Guys, we're upgrading the financial system,
Tokenize the world.
one share at a time.
Boom. Don't you love like the
At Securitize,
essays at the end of all these like companies that are ready to go public or are public, that they have to like full on do these like essays about disclaimers? Let's
These
give
are
them some love,
disclosures.
man.
I mean, these are public companies. They have to, but obviously these are things are like the terms and conditions. They're regulated. They have to do this, but who's going to read all this? We're not going to read all this. We're not marketing
I don't
these
know.
securities. We're just marketing the infrastructure, right? Like they are tokenizing this thing. No matter what they're tokenizing, it's very cool to see that you are going to get these digital representations on chain.
Yeah.
I'm going to be very curious as to what kind of demand we're going to see for these things from the traders on chain. You know, we've been talking a lot about RWAs. We've been talking a lot about these things. Look, I'm very, very curious. I've just recently developed kind of this thinking where, you know, obviously yield farming 2021 all the way through to 2024, there is demand for yields on chain. But at the end of the day, these are like, it's a culture of degenerate meme coin traders, shit coiners, and, you know, and anons, you know, how the entire yield farming craze was as a result of, you know, triple digit APYs. To think that we're going to get a cohort of people that are going to buy these, you know, 5% things on chain. I'm just, you know, maybe it's there, but to hear the likes of, you know, Franklin Templeton and some of these guys say like, hey, we want to tokenize our funds because, you know, there is demand for these things on chain. I don't know. Maybe I'm just cautiously optimistic. I'm a bit skeptical. Although I do think here what we're seeing is that there's tokenized equities. People want to tokenize there because they can tap into net new liquidity, net new demand as a result of tokenize those securities.
Yeah.
So obviously two very different products here. Some of these are speculative tokenization paths. Others are non-speculative. Overall, more assets on chain. I think it's great. And maybe it's just not it's just the network effects. Once we do get more sophisticated asset managers and capital allocators on chain, those will be the yield farmers of this new era, these institutional yield farmers. They're not looking for triple digit APYs. The old retail cohort that was yield farming the triple digits, they're going to be going into tokenized equities. And that's the primary user of perps, leverage, that sort of thing.
Yeah, I mean, at the top of each cycle when you're trying to de-risk, I often find it better for my mental and for my portfolio to just get everything out of a place where I can aggressively shitcoin. So I see that as one interesting thing. But at the same time, like I could see a world where it's just easier to just do this all on chain. I mean, that's the whole point of what we're doing here. And so in any case, it's kind of like that Jevons paradox thing where like, if you just put enough of these products on chain, give enough people access to equities, to money markets, to different products, then hopefully then they will actually use it, right? And I think that a lot of people in the past 6 months would have been interested in getting some yield in a product that isn't a sketchy DeFi vault or some like overly complicated yield strategy. Put something into a, secure money market powered by a large kind of manager or asset manager, and then do it on chain. So, all right, let's move on from Securitize, guys. Shout out to them. Guys are cooking. Big congrats. They have a big public launch coming out as well. Should be good for them. Kind of get the fruits of their labor soon.
That's one way to put it. Adam Back says he's not Satoshi. The New York Times says that he is. Adam Back says he's not Satoshi, but he was early in laser focused on the positive societal implications of cryptography on electronic cash. Hence his 1992 onwards active interest in applied research on eCash, privacy tech on Cypherpunk's list, which led to Hashcash and other ideas. These were almost forms of electronic cash before Bitcoin was invented. He was obviously very involved in this space. Adam Back is the CEO and founder of Blockstream, which is still a very prominent Bitcoin company. Bitcoin politics is very, very muddy. People are screaming that Bitcoin needs to become quantum resistant, have a quantum plan. Adam Back is one of the ossifiers of Bitcoin. One of the best takes I saw on this was, do you really think Satoshi would be forming a digital asset treasury company with Cantor Fitzgerald?
Yeah.
Of which Adam has. There was also some very peculiar things that did lead to the direction of people suspicious that he is Satoshi, which is he had email communications, but he didn't want to share the metadata of the email. And then the New York Times author of this article was able to determine that there were some similarities in the way that they had sentence structure, punctuation, capitalization, language, these sorts of things that led this author to believe Adam did have the character name of Satoshi because of this similar linguistical style. But here Adam is claiming he's not. Andy, who do you believe?
I think that we see this kind of stuff all the time. We see every couple of months to 6 months to a year, you get a new Satoshi character in the market. And no surprise here that this is a new one, right? I'm not sure I've ever heard Adam be the Satoshi character yet. So I don't have much to add here. Well,
The one thing that's funny here is that, you know, I usually the people that you're talking about that come out of the woodwork that claim that they are Satoshi, it's them claiming it about themselves. Craig Wright being the number
infamous
one,
right?
infamous case here where he's saying, I'm Satoshi, I'm Satoshi. Everyone's just move the coins. All right, Craig, you're Satoshi, just move the coins, sign the transaction. And he couldn't do it.
And they never do it, do they?
Adam is the only one where he is claiming that he's not. Other people are claiming that he is.
He is.
And it's in, you know, obviously if anyone comes out as proven Satoshi, if his, you know, coins move, transaction signed from his wallet, you got to think that the entire market would dump significantly. Right?
Think.
Absolutely. Because if Satoshi has this Bitcoin has this immaculate conception idea, where you just can't really put a pin in it. You know, you don't know if it's some divine intervention that came in and just struck Bitcoin into the world. Like it's about as amorphous as it can get. If any sort of tangibility comes behind Satoshi, I think it crashes the Bitcoin market. And so Adam, because he's got a Bitcoin company, obviously owns a lot of Bitcoin, a lot of financial interest. He's invested and incentivized to say that he's not.
Of course.
And so
everyone is basically, right?
Yeah. You know, I mean, Craig Wright had Bitcoin SV, right? And so obviously as a Bitcoin fork, if he was a real Satoshi, he had Satoshi's vision. He crashed Bitcoin, the Bitcoin fork would go up that he's attributed to. Adam has put his stake in Bitcoin. And so I think he's incentivized to say that he's not. That being said, I still think he's actually not. It's not just him saying
I
this.
agree. All right, Adam, we'll leave you to your nice privacy. Hopefully your DMs haven't been too crazy or anything. We'll move on from Adam here and go into the effects of stablecoin yield prohibition on bank lending. So we had kind of some conversation as of late about how the stablecoin yield is going to affect banks and deposits into banks. And again, this is a big fight with regards to, will there be massive capital flight from banks if this Clarity Act goes through in the way that people want it to, and the Genius Act? And so obviously we had the Genius Act signed into law in July, and this is now getting to the implementation phase. Today we had the Treasury, the Treasury Secretary Scott Besant saying that he's trying to urge Congress to pass the Clarity Act ASAP as well. He's looking to get this economic and geopolitical competitiveness from a national security perspective. And he also, of course, expressed something that a lot of us know, which is that there's this time constraint, right? There's up until about July to get this through before Congress and House go on their tours to get reelected. And Genius Act depends on Clarity Act getting through. And so looking here, people have done research basically saying that bank lending will be extended and expanded a lot if the stablecoin yield prohibition is part of Clarity. They've done a lot of research on this. I remember Cody Carbone was pushing for this to have some studies and some case, kind of like forecasting done. So it looks like we got that forecasting here. And yeah, I mean, it doesn't look so bad, right? Like it looks like that their banks are coming to terms that it's not going to be that bad for them, that they're going to be able to get this through in terms of the actual setup here. So why don't we flip to Jerome, actually, if we can, or sorry, not Jerome, Scott, talk a bit more about Clarity, because I think that is what's driving what's happening here in Genius, Rob. And so I think, it seems like right now the stablecoin yield stuff is not going to be a huge issue, but I don't think that crypto is going to get exactly what it wanted here.
Yes. So it's pretty interesting to see this executive summary. What it says here verbatim is that it prohibits stablecoin issuers from offering any form of interest or yield to stablecoin holders. That is directly contradictory to what we heard crypto and AI czar David Sachs talk about. He said right now the Genius Act does allow these stablecoin issuers to pay yield. And that's where the caveat comes in. It does not explicitly prohibit affiliate or third-party arrangements that might offer interest-bearing products. The report goes on to say at baseline that if you eliminate this caveat, it would increase bank lending by about $2 billion, would have a net welfare cost of $800 million, translates to an increase in lending about 0.02%. Large banks would conduct 76% of this additional lending, while community banks, which have assets below 10 billion, would lend the remaining 24%. And so if the goal, which I believe the administration's goal is to add more lending via community banks, eliminating this provision on the Genius Act so that you prohibit any kind of yield-bearing products, would increase community bank lending by about $500 million. And so that's the dilemma here. The administration has to choose: are they going to support their community bank agenda? Remember, Main Street, not Wall Street. That is effectively supporting community banks in local areas, versus the president, who's been very vocally supportive of crypto. These things are at odds, and it's time to choose.
Yeah, man. I mean, look, man, they're worried. And I think that I am still of the mind that this is getting through Q2, which is where we are now. We just entered Q2. I put out a prediction that I think Clarity is going to go through in Q2. I still firmly stand by that. I mean, we have heard so much about this getting through that it feels like a broken record now.
Clarity Act signed into law in 2026, 59% chance on Polymarket.
59
by 2026.
Yeah, I assume that Q2 would be like in the 20s then.
Yeah, but we've also heard that Q2 would be the time to make it happen because all of these politicians go and campaign by the fall and the winter. And so if it's going to be 2026, I think you're right. I think it would be Q2. I would put it pretty much at a coin flip, 50-50 if it gets signed in by Q2.
All right, guys, let's move on into what our friend Eleanor has been pushing, which is the Clarity bill from Secretary Treasury Scott Bessent. Basically, he's urging the crypto market structure legislation to get through, a national priority saying economic security is national security. Again, trying to create the continuation of the digital dominance of the US dollar. And so he's warning that time is of the essence and that the Senate floor time is scarce. And yeah, I mean, look, we're looking for strong government backing here to complete this regulation. I think, again, Q2, as we said. And I mean, look, if you're sitting around in the conversations here, you know, somebody like Scott Bessent coming in and having a strong opinion may or may not mean much to you. But I think the more that we get this kind of like urgent opinionation happening from people like Scott, the more that this starts to really go forward. So that's my take on this, is that, look, Q2 guys, I'm on, you know, team Q2. I think it comes through then. And yeah.
Yeah, the genius can't be realized without clarity support. Do we have a tinfoil hat anywhere?
Yeah. Why?
Well, I think it might be a necessary prop for the office, and maybe for the studio here in Miami, because I think there's multiple things here converging that, you know, are sort of just spread out. And so just follow me here on this. You know, we've obviously got Genius Act, we've got clarity in the works. At the same time, obviously, we've got the war going on in Iran, and then you've also got Tether that is making a push into the United States. We know that Secretary Bessent is hell-bent on selling U.S. Treasury debt.
Mm-hmm.
He's also made it clear that stablecoin issuers could be one of the primary purchasers of Treasury debt.
US Treasuries.
And so we know Tether, as it continues to make its United States push, is a potentially very large buyer. At the same time, we have this increased aggression in the Middle East, which is looking more and more like it's causing our Gulf state allies, Saudi Arabia, Dubai, some pretty large sovereign purchasers of U.S. treasuries, to kind of fray, you know, our friendship with them. In which case, you know, Trump could be essentially creating the end of the petrodollar, right? Where we have cheap oil that gets exported to the U.S., they pay in return with buying U.S. debt. If that is no longer the case, the strait is closed, Iran is running the strait, and we don't have free-flowing oil, it could be the case that these sovereigns are no longer buying U.S. debt. And this is a very important handoff that could happen between the buyers of this U.S. debt being sovereign nations versus the buyers of this U.S. debt being private networks, private stablecoin issuance companies. And so my tinfoil hat says, my conspiracy theory, allegedly, I would suppose that there is some connection between the passage of clarity, the entrance of Tether into the U.S. market, as they continue to accumulate U.S. Treasury debt. Bessent needs to sell that debt, and we know that we're cutting off a significant buyer in the Middle East, in all of the sovereign Gulf states that are currently buying all of that U.S. debt. I think there's a very strategic handoff that is going to happen. And it's important that we get a lot of this legislature through the Senate now in order to essentially clear the way before we completely cut off our allies out east.
Interesting. And the passageway the toll is being paid in Chinese yuan or cryptocurrencies is also a part of this, right? Because that was previously paid in dollars.
I don't know if there was any tolls. Like right now, I don't think there was anything. I mean, I think they were just passing through the strait, and they needed to get to where they went to go, where they were going. And wherever they got, you know, there was some insurance and there was transportation costs, and all of these things were paid in their local denomination of whatever flag they were flying on their ship. Yeah. But as far as this toll that Iran is now choosing to charge in either, you know, yuan or crypto, Bitcoin, I think that's a new thing that Iran is only doing to slow the passage of ships through the strait. Yep. Yep. You know, interesting. The current dynamic of the petrodollar is effectively that these Gulf states are buying up these treasury debts and they're exporting oil. And that is kind of what balances out, their imports and their exports. We don't have anything to export besides our currency.
Yep.
Right. And so I think if we're cutting off those purchasers, we're going to need to find new purchasers. And I think the clearest example of new purchasers is the stablecoin issuance companies. But we need the legislation in order to completely free the way for them to come in and purchase large amounts of US debt.
There we go. Our local in-house macro expert. Ladies and gentlemen, give it up for Rob. Guys, dial. Petrodollar is coming to an end if we can't get this solved. We've got Dom and Phil Kwok, the co-founders of EasyA, and our local friends here from the UK, talking about some of their theses today on the show. Let's bring them up and let's get this show started, guys. Dom, Phil, welcome to the show, guys.
Thank you very much for hosting. Thanks for having us on.
What's going on, guys? How's your conference tour been? I saw you guys I think you guys did the same triple as us, DC to New York to France.
Yep, precisely. Yeah, we were leading the UK-US delegation out to DC, so I had some great meetings out with the SEC, CFTC, other regulators, lawmakers out there, and then headed straight down into Cannes. And then through, and then we're actually hosting an event together with Super Team over in Amsterdam this weekend, and then over at Paris Blockchain Week. So, and then back in San Francisco afterwards.
And what is the main prerogative for you guys at these conferences? What are you most trying to accomplish?
Really, the big thing is, of course, EasyA today is the biggest Web3 onboarding layer where we've brought on the world's best builders to build on these blockchains. And that's really what we're doing at all these conferences, number one. And number two is we actually have some very exciting things we're working on EasyA Labs. We're actually building our own on-chain products. So that's what we're hard at work away on with our partners and also together with our team.
So one of you guys works out a lot, right?
Yeah, correct. That's me.
Did you hit the gym today?
I'm about to actually after this, so it's coming up to evening time in the UK. I normally like to go at the end of the day. Yeah, exactly.
Nice.
I will say I do work out too, but it just doesn't show as much. Still run. So when you run, you can't really tell if someone works out.
And why the end of the day? You're not tired from working out or doing meetings and running around? Like why the end of the day?
I mean, I do a lot of strength training, and I feel like at the end of the day, you feel you got more food in you. You've had a whole day of eating and normally, sitting down and working. So yeah, for me, it's like, it's the best time. I have more energy in the evenings actually than in the morning. So yeah,
very cool.
It's,
nice.
There we go.
All right, guys, let's get into the meat and potatoes of this. We have a lot of people in the crypto community who are not big believers in XRP. You guys have this Chainlink versus Ripple war going on. Why are you guys on Team Ripple? What is it about XRP that you guys are so excited about compared to Chainlink? Why do you think XRP is winning this war?
Well, I mean, I think, a couple of reasons. I mean, I first of all, I wouldn't say it's a war necessarily.
Oh, it's a war.
I think like on social media, things tend to get, a bit over polarized. Obviously, people like to, smash down other people, and, Twitter's like a crazy place ultimately, especially when people are anon. And they say some wild things, but Phil and I love it on there. So we get into these things sometimes, and I think for me and for Phil as well, I know we've worked with Ripple for a couple of years now, and really what we see there is sort of a really land and expand play. So obviously Ripple started with XRP. They sort of, grew that. And ultimately now what's really happening is they're actually acquiring a lot of different companies that are really deep in the, traditional finance space. So, they bought Hidden Road, for example, G Treasury, a bunch of other players, which actually have, many, many different paying customers, and they're real businesses. And, the thesis there is, we bring these kind of companies onto the blockchain, and once you own them, you can really bring them onto the XRPL, which is of course their blockchain, and ultimately you can actually do things much more efficiently. You can bring even a fraction of those transfers and transactions onto the blockchain, and ultimately that is a huge level of activity that other blockchains just simply haven't and probably won't see. So I think there is definitely a place for different blockchains, and the future is definitely multi-chain. But for us, in the near future, I'm personally very bullish on XRP, of course, and Ripple as well as a company in general.
So before we start getting into maybe the nuances about, why, one thing might be better than the other, can you just catch us up as far as, what the Ripple story has been over the last few years? Because at least from the US perspective, it was like the scapegoat for the SEC. It was attacked, it was drowning in lawsuits. And then it sort of went ghost, right? All of the exchanges kind of delisted it. I think maybe there was one exchange that allowed someone to trade it, but you didn't really hear a lot. It was always just this lawsuit, this lawsuit, this lawsuit. There wasn't really a lot of business, operational, or research that was continuing to drive forward, at least not that we heard about. And that was the case from 2017, 2018, all the way through to, maybe 2023 or 2024 when the lawsuit was resolved. What happened in that time frame? Was it all about the lawsuit, or what were they doing besides this lawsuit in real business operational standpoints?
Yeah, I mean, there was a lot happening. Of course, the lawsuit was what everyone heard about in the public news. The lawsuit was what really, I think, actually, prevented a lot of other companies from working, of course, together with Ripple. People thought, okay, maybe this is not something we want to go close to, but of course, under the surface, the rails were being built, and of course, technology development and all of that stuff was still happening. So there's definitely a lot of stuff, and not everything can be shared publicly, but a lot of stuff was definitely going on. And now you're starting to see, with those different acquisitions, with those different partnerships, you're actually starting to see companies can actually now work together with Ripple and can actually use the tech that they've been building out. So of course, during those times, it was a great time to actually build the underlying infrastructure. The XRP ledger, of course, is one of the oldest blockchains, and it's one of the few blockchains that actually never stopped, never gone down. So in terms of reliability, it really is sort of one of the top candidates for institutions to use, and ultimately, that's really what was happening during the lawsuit. But I think, like you said, Ripple was one of the scapegoats. I guess it was one of the biggest blockchains that they could really go after because there, of course, was a team there, unlike Bitcoin, which you can't really actually, I guess they technically found who Satoshi was yesterday, but I don't think anyone really believes that or really has much conviction in that sort of finding. So yeah, really, it was a convenient scapegoat, and I think ultimately Ripple was able to, come out on the winning side. And the community as well was, very badly impacted, of course, by the lawsuit. People going against the community and people really sort of, having a lot of bad sentiment towards them. But ultimately, they persevered and really sort of came out on top. And I think going forwards, is really going to play an important role in the future of DeFi and the future of crypto. And I think the most important thing really to, sort of emphasize is the power of the community. We work with a bunch of different blockchains, and there really is no community that's sort of as powerful as the XRP army, so to speak. They are sort of, all over the world. Wherever we go to Japan, we go to Korea, America, Europe. There's always people in the XRP community there. And people really, really love what the company's doing. And ultimately, I think a lot of times when you look at blockchains and the value, it really comes from the communities. You see a lot of blockchains that do better, whether it's in terms of token price or whether it's in terms of adoption, but it's because people know about them. You look at CoinMarketCap and you look at the top blockchains there, it's really about, having those people who are actually holding the token, backing it, and ultimately those people who hold it also then will, hopefully in the future, use it, right? Because those are people who actually know about it. If people don't know about it, hard for them to use it, hard for it to actually get implemented and achieve the mass adoption. So it's sort of like a self-fulfilling prophecy almost. I see it in my mind.
So with the Swift stuff, I feel like Chainlink actually had Swift kind of partnerships happening, and then Ripple kind of hopped on and tried to make it theirs. What's your opinion or what's your perspective on the Swift dynamic as it pertains to the community?
Yeah, I mean, I think, when you look at Swift, I don't think Swift is necessarily the major sort of, thing at the moment. I think there are much bigger and broader goals aside from Swift. Of
Yeah.
course, Swift was sort of, like maybe the original premise, but I don't think that Swift is sort of the limiting factor at the moment. There's so many more use cases. We do a lot of work, of course, in developer education, developer advocacy for these different blockchains. And where we see the XRP Ledger and Ripple really standing out is really on the institutional side, and really actually getting those financial use cases built out on the XRPL. We hosted a big hackathon with them, a couple actually last year.
Nice.
One in Hong Kong at Consensus, of course, and we hosted a big one together with them in Singapore around Apex, which is their annual developer conference. And we see a ton of really cool use cases, both being built out on the XRPL, but also with RLUSD, their new stablecoin, which is already one of the most successful stablecoins out there. So yeah, there's a ton of really cool stuff that can be done beyond Swift, and I think it doesn't necessarily have to center around that. And of course, there's so many different things that can be done, and we've already seen built. We have a lot of developers who are actually now raising funding for projects they're building on the XRPL. And I think there's a lot of renewed interest as well amongst investors for what's getting built on the XRP Ledger, and in part because of the work we've been doing to get developers to the blockchain.
One of the companies that has some striking similarities between similarities to Ripple is Canton. This is another company that gets kind of this institutional perspective around it. There's a lot of negative sentiment thrown at it because it's got this air of maybe it's not so permissionless. It's not so open. Not everyone can kind of come to it and see it. It has this feel of consortium or institutions that are sort of running the chain rather than a chain for the people, if you will. I'm curious how you are seeing Canton. If you're seeing Canton and Ripple as sort of a similar building with similar design choices, if so, is this kind of a frenemy relationship? Like, Canton's kind of rising through the ranks, taking kind of a play out of the Ripple playbook. How are you seeing Canton from inside of the Ripple army?
Really good question. I think we were actually chatting with some of the Canton team, and it's interesting what they're building. I think they're obviously much newer than the XRP Ledger, and I don't really necessarily see it as being competition. I just think the way that I see the whole of crypto, I've been in the space since 2013, first got into the space through Bitcoin mining. I think there's just so much blank space. I feel like everybody's, sometimes we get obsessed with this PvP nature, and maybe it's because we're more in a bear market that everybody tries to pit each other off against each other. But I don't think that anybody within Ripple really, and also within the XRP army, really sees them as much of a threat, so to speak. I think really it's about focusing on where are we going to actually develop in terms of bringing these institutions on chain. And so I think Ripple obviously are very interesting because, like Dom mentioned, they've actually made huge inroads into these big institutional partnerships, including actually making big acquisitions of their own. And so you have Hidden Road, which is now this big prime broker. It's very institutional, which is now Ripple, right? And we have now Ripple Custody as well. So I think Ripple are taking more of this, I was going to say sort of Silicon Valley approach, in some ways more just building a real company around it. Of course, it's Ripple Labs, right? Ripple is a for-profit corporation. It is not a non-profit. It's not a foundation in the same way as many others were founded, which came afterwards. Obviously, Jed McCaleb founded Ripple, and then also afterwards founded Stellar, which then was a not-for-profit and a foundation. Ripple's goal is obviously, as a for-profit, and its goal is really to actually grow itself a lot. And it's making all these acquisitions. It's just fundamentally a different beast. And I think it's actually quite unique in terms of the companies that are out there, and that many of the labs were structured as labs. And then they had the foundation, and the foundation will, this whole structure is very different to what we see. So I think Ripple out there are doing something different. I also think that the way that they're tackling this institutional play is quite different. Like, they have really taken proceed by acquisition and also grow by acquisition approach. And now they actually have this full stack of products where you have custody, you have this prime brokerage, you have at the same time, you have wallet infrastructure, and just across the board, you have this full suite that then you can go and you can say to an institution, look, you can use Ripple's suite of products, and boom, that's pretty much all that you need. I think that is a very, very compelling proposition to especially institutions. It's a complete minefield out there. You don't know who to go. It's a patchwork of different products that you have to use. Whereas if you can go to Ripple and say, hey, I want to get into crypto and I want you to help me. I want you to deal with the accounting. They now have G Treasury as well, which they acquired. They can just deal with it all.
Yeah. Makes sense. But if I were to push back a little bit, the peer-to-peer nature, PvP, the tribalistic nature is something that's, intrinsic here. But I think the reason being is that, the design choices of some of these chains, we have a common goal. It's ultimately to bring these assets and these financial mechanisms on chain. But the design choices of some of these chains are such that it feels like we're just recreating the same system that we have in traditional finance. And so putting them on one chain, isn't as good as maybe putting them on another chain with, what some would consider the right design choices. Couple that with, the fact that a lot of people kind of believe that, it's one chain to rule them all. Like you said, Ripple's got this full suite of products. It's kind of all you need. You don't need to go to another chain. If that's the case, then it really is one dominant chain, and the network effects are such that they will continue to compound and grow in terms of capital and adoption after they get some of that initial, kind of the initial spark that ultimately gets them to some form of product market fit. They will just continue to compound and grow. How do we rationalize this? Because ultimately, I think we have this common goal. We have this everything on chain mindset, but it doesn't apply to what people might consider some of the, incorrect design choices and the open composable environment that people like when they think about, kind of this new financial system.
And I think insofar as we're talking about the way that these different blockchains are built, I think that when you talk about institutions in particular, I think that actually the XRP ledger got a lot of flack, and the team behind it got a lot of flack for actually never introducing smart contracts in the sense that people typically think of them. And everybody for a number of years looked at the XRP ledger and said, it's ancient tech, right? And it's like, it's outdated. Why do you have this? There's no smart contract. Why are there no smart contracts? And that actually turns out to be one of the biggest advantages now of the XRP ledger, in that everything that you use, you still have, you can issue tokens on the XRP ledger, you can issue NFTs, you now have AMM on there, you have, of course, the oldest DEX, arguably the oldest DEX, been operating for over a decade now, and it just works and it's battle tested. And I think when institutions come, they don't have to be dealing with smart contract risk as well. And so I think, look, we look at these different blockchains, and I think I do think that there are going to be other multiple blockchains. I think that I was on a talk together with David Schwartz, who is CTO emeritus now of Ripple, but I think we all see the same thing. And I think it's just, where does each blockchain want to position itself? And I think the XRP ledger, as David said, is really positioned to become the liquidity hub. And so you can have different things happening on different chains. Ultimately, if that liquidity comes back to the XRP ledger, that's where it's really going to shine. And I think we've seen this with the Ripple approach as well, to actually deploying its products on other chains. So RLUSD is actually deployed on Ethereum, right? It didn't just deploy it on its own stablecoin on the XRP ledger, and it's all because it needs to tap into that liquidity where it is, and then bring it back eventually to the XRP ledger. And so I think that when we're comparing these two together, I think when we're looking at Canton or any other network, I think ultimately it's about who is it positioned towards. And Ripple from the very beginning, and the XRP ledger from the very beginning, were geared towards the blockchain for business. And I think Canton is taking interesting steps towards that as well on the institutional side. But I think there's enough room in the pie for everybody.
Yeah. Phil, something that you and Dom both kind of spoke about was this acquisition, kind of acqui-hire of several different, revenue generating off-chain entities, companies, and businesses that Ripple Labs has acquired. I think it's something that the broad kind of L1 space is starting to really tinker with, right? You had these tokens launched worth billions of dollars. The actual business model of doing charging fees for block space, for transaction fees, has really been effectively commoditized or brought down significantly as we see kind of like the next iteration of the fast chain, cheaper chain, etc. And so you kind of have this interesting setup where these foundations, Polygon, Aptos, Solana, Sui, Ripple, et cetera, all of these kind of chains have these really large war chests, but not a lot of like revenue generating activity themselves. And so they go out and they buy businesses and they implement their technology, or they bring them onto their chain, or they just kind of like in-house these businesses. Do you guys think this is something that's gonna just accelerate? How do you guys see this like transition from like blockchain that has this war chest, not a ton of like actual revenue generating activity on it, whether it be through fees or through kind of other popular apps, moving into kind of like almost like acquisition vehicles based on the tokens that they've created, that have been launched and that trade in the billions, leveraging some of that capital to build businesses within that brand? How do you guys see that happening? What's that acceleration like? Yeah, just curious how you're thinking about that.
That's a really good question. It's something that I've thought about a lot. I just look at it in terms of also the progression. When I first got into space in 2013 through mining, the only thing really you could do was just mine the stuff. You could fork your own, you could fork Bitcoin and maybe make your own fork. And so there was Litecoin, Primecoin, Feathercoin, all those sorts of coins. And then flash forward to today, I think that we've progressed. Whereas maybe a couple of years ago, especially around the ICOs, you're right, the business model was basically you launch a blockchain, you sell a token, and that's the way that really these things actually get a life of their own. Similar sort of thing around 2020, 2022. You now have this split of labs, foundations. Everybody gets some amount of tokens. They sell the tokens. And then the idea around then was hopefully you can generate fees. Obviously, Ethereum was generating a lot of fees at the time. And now we've obviously seen this commoditization of block space, even of high quality block space as well. And so that's no longer the only thing. But at the same time, what we saw in particular over the past 2 years, which has never really happened before, is real protocols generating insane amounts of free cash flow. You have the likes of Hyperliquid, on the meme coins, you have ones like Pump.Fun. You have all these protocols which are actually throwing off a lot of cash. And where I think we're heading is towards this verticalization. I think that we are going to see product-specific lines where you have this blockchain and maybe the blockchain is under the hood. Maybe users never really experience it. We have what obviously we're seeing with Robinhood under the hood, so to speak, and what they're doing together with Arbitrum. And we have Ripple, who are verticalizing this whole product line. And I think ultimately, when you look at crypto maturing into products that people actually want, to take the phrase that Y Combinator, of course, use, it's just where we're going to be heading, especially because you now finally can actually generate a lot of money if you have a really good product and a really good product line. So I think to your point, absolutely, we're going to see more of this verticalization. I think we're going to see more of these foundations. A lot of foundations are not going to make it through this bear market. A lot of labs won't. And ultimately, it's going to be the ones that actually have products that people really want to use who are going to be the ones that make it through, because not every foundation, especially in a bear market, foundations can't just sell tokens forever. Eventually, that red line starts to flatline and die, and ultimately, coming towards the end of this bear market, we're going to see the strong ones who have really been able to build products that people actually want to use actually start to win.
Yeah, Dom, curious your take on this acquisition story as well.
Yeah. I mean, I obviously agree with Phil, and I think the growth by acquisition story is playing out with pretty much all the AI companies you look at as well. Anthropic, OpenAI, Cognition, all of these amazing companies, they are also acquiring a bunch of other companies too. And when you see their revenues doubling, tripling quarter on quarter, that's not only because they're doing better and more people are using AI. A lot of it is down to the fact that they're also buying other companies. They raise a ton of money from the VCs, just like how the blockchains might have raised money from investors in the early days and also retail. And then they use it to buy other companies. And that revenue, of course, gets filtered up into the main company. And that's just how business works. So I think it's a playbook that, of course, happens in every industry. Facebook, Meta, they bought Instagram in the early days, and now Instagram has become huge. It's become, more popular than Facebook by a lot of metrics. And ultimately, I think we're going to see the same thing with the blockchains. Maybe one of the companies that Ripple's bought actually ends up becoming the company that sort of generates most of the revenue and actually generates most of the transactions and uses the blockchain the most. So we'll see, but it's an exciting time. And I think we're at a very unique, pivotal moment in history where we're going to start to really see the winners speed ahead and the other sort of, 99% sort of wither away.
before we let you guys go, could you just shout out maybe like one or two of the top projects that, like, who is bringing the most in terms of assets under management, deployed that onto the Ripple ledger? Obviously, the Ripple stablecoin RLUSD, is deployed on the Ripple ledger and then also abroad on, several other chains. But who are some of the other leading projects that are either building some sort of mechanism or rails? Is there a perps ecosystem? Like some of the larger instances of adoption on the Ripple ledger?
Yeah, I think so. There are some really, really cool guys. Obviously, what we're building. Obviously, EasyA. We are building on the XRP ledger, and so we're going to have a very cool announcement that we'll be able to make at XRP Las Vegas, which is going to be right at the end of this month. Of course, institutions are building. We actually have the largest XRP treasury company, Evernorth, who have very publicly now said that they are going to be deploying capital in this ecosystem. Of course, that is a huge, huge move. It's got over $1 billion, and this is like massive for the ecosystem. And then at the same time, in terms of institutions, we have a big announcement that Ripple made together with Aviva, for example, in order to tokenize and explore tokenization there. And so I think, look, we've got RLUSD, which is a huge stable coin now and growing very, very rapidly on the XRP ledger. We have institutions who are coming as well. And of course, on the grassroots user level, we at EasyA are building, alongside everybody. So I think, especially with some of the amendments which are coming up towards the end of this year, we're going to see a lot of exciting things come out. For example, the lending protocol, which is going to be going live on the XRP ledger. It's in amendment form at the moment. All of this stuff is, setting up to be very, very exciting.
Quite a few more exciting ones too that we can't announce on air, but
yeah,
might be too bullish. So we'll save those, keep those on the wraps for now.
Are you guys all in XRP, like full on, like just all in?
No, I mean, we obviously, that's one of the sort of, high conviction themes we have, but we're also very bullish on Solana. They're one of our earliest partners back in the day as well. And I think they really go after a different sort of target market, but they've done incredible work with developers and really cultivating that side of things. So the way that we see it is, Ripple's really great on the institutional front, but Solana's really great on the consumer front, and they have incredible apps built on the Solana blockchain, like Pump Fund, like Phil mentioned, that have a ton of users and generate a ton of fees and revenues. So people are building real businesses on Solana too. But yeah, I think different strokes for different folks, and some people are more interested in institutions, some are more interested in consumer, and I think there are going to be a handful of blockchains that win, but a handful. I don't think necessarily 100 all of the different 100 blockchains and the coin market cap have to win, and they won't either. But I think we'll see 3 to 5 big winners.
Do you own any Hyperliquid, Dom?
No, actually, no, I don't.
Why not?
I've never actually. Well, I think now obviously it's run up a lot, and I think getting in now necessarily isn't the best risk reward. But back in the day when they were just coming up, I should have actually looked into it more. But I think that was just my mistake, not looking into it when I first heard about it.
10,000 hype in a dream, Dom. That's all you need. 10,000 in a dream, brother.
Maybe if I can go back in time and invest in them, I would.
Now then, you would have put more in XRP.
And all of the different tokens, right? When they're just fractions of cents.
Man, you guys really think XRP is going over $10?
Oh, definitely, for sure.
Dude, that's just not gonna happen.
Remember the XRP to what was it?
589.
Was it
I think
589
these guys are calling
or
for
523?
1,000.
No, I think I think it could go over 1,000 definitely in the next 4 to 5 years.
But wouldn't that put it above the market cap of?
Yeah, it would. But you look at Bitcoin, right? You look at Bitcoin. I mean, why is Bitcoin valued more than most major companies out there when Bitcoin doesn't do anything? I don't think when you look at crypto and you look at market caps, there isn't really like a there isn't really a ceiling, to be honest. And I think
XRP would be $50 to $100 trillion market cap at 1,000 in that range.
That'd be 25 to 50x Nvidia.
2030. Let's book 2030 on the calendar, and then let's resync and look at the charts.
Okay, and so should we put a bet on it then as well?
Yeah, we can. I mean, we'll think about a good way to structure the bet. Yeah, we can put some money in escrow or something. So yeah.
Oh, I'm just giving you some shit, man. Thanks, guys, for coming on. Hope you guys
We'll
have a
be
good.
retired by then, actually. So
Right. Yeah.
we'll make it to the interview.
Zero or Valhalla, lads. Where are we at today with this old boy Ripple? 135, huh? All right, so we're looking for 700x.
Well, I mean, in crypto, that's not that much, is it? 700x. We've seen much more.
Well, we got to get all the bankers on this one then. I'll tell you that much. Dom, Phil, thanks, guys. Enjoy your day. Have a great lift. And wish you the best on this journey to $100 trillion per XRP ledger.
Cool. We'll see you in 2030.
Valhalla, man.
See you there.
Strap in, brother.
Cheers,
Take
guys.
it easy, guys. Cheers. Alrighty, Rob. Yeah. 100 trillion. XRP. Damn, I really wanted to get them to say something about Chainlink. They have such a rivalry. What's his name? Chainlink God is so anti-Ripple, and they go at it about Swift. But look, I think generally the whole acquisition thing is just going to accelerate. Like, if you're a foundation with hundreds and hundreds of millions of dollars of tokens, you're gonna just acquire businesses. I mean, why would you not? Right? Like, I don't know. Yeah, I mean, I think they're doing that right. The only thing about XRP that still gets me is just like the way that it was started, man. The whole pre-mine and the whole founders dumping, it's just hard to get, it's hard to get behind that, man. But then Bitcoin people will call Ethereum a pre-mine token as well. There's just different like levels on the spectrum, right? Like, it's hard to know, you know, who's saying what. So yeah.
I mean,
I don't know, man. That was
just
wild.
That was just comedy there for a little bit. I don't know how these guys say with Ripple to $1,000 with a straight face.
No, I mean, 100 trillion.
$100 trillion market cap.
That would be insane.
I think that would be greater than the sum of the entire stock market, all of the companies added together.
Yeah. I mean, wow. I mean, that would be like, yeah, that'd be like 50 NVIDIAs or something like that.
Yeah. All right. Quick commercial break. I'm going to let you and Brian have a great combo in the tokenization tower. Enjoy. And yeah, maybe, you know, he's going to have a little bit of a different take than Ripple to $1,000.
Alrighty, man. I'll see you in a bit. we are live here with Brian Wong, is a venture capitalist and an entrepreneur. We are in New York City.
Yes, we are.
We are in the Empire State Building. Welcome to the Tokenization Tower, Brian.
Thanks for having me.
Brian, you have a interesting background, a co-founder of several companies, raised a ton of money for your consumer brands. What are you doing in New York? I also saw that you're a digital nomad. I'm a digital nomad. I've been living in Brazil, Asia, Europe, all these other places for the longest. What are you doing in the city, man?
I live here now, actually.
Okay, cool.
Yeah. I love it here. I've been here now technically 10 years, but on and off between San Francisco and New York.
So your nomad careers came to an end.
Nomading has now ended, yes. Yes.
What was your top spots, man?
I mean, I've always been all over, but I still love Mexico City.
Okay.
Vancouver, which is where my family's from, where I was born. San Francisco, where I spent a lot of time building my last company. And then, of course, here in New York.
Nice.
New York is still the best city on earth.
Yeah,
I still
100%. Tell us about your fund. Is it Ascii Ventures?
Ascii Ventures.
Ascii
Yes.
Ventures. What's your thesis? How'd you get this started? And yeah, man, welcome to the show.
Thank you. Well, Ascii, for those who are nerdy enough to remember, is the precursor to Unicode. It was American Standard Code for Information Interchange. It's like meant to kind of be like a filter for the nerds that come in and pitch or that we work with. But Ascii is a fund. It's a boring tech fund, is what we call it. It focuses on behind the scenes technologies, things that are powering other things but aren't really seen and are meant to be used daily, but you just have no idea that it's being used daily, like those kinds of things. So obviously a Plaid or what was a Stripe, we obviously wish we would have been a part of those companies, but no one would have even known those were businesses, and they're behind the scenes most of the time, right? You don't really see them. They've built consumer brands on purpose to enact trust, but most of it is behind the scenes. So we focus on those kinds of technologies, picks and shovels. We have a unique strategy. We're doing primarily early stage, so things that are before revenue mainly, that's the goal. And then we're also, so anything under 15 million valuation and anything over 15 billion is what we say. So people kind of pause for a second, like, what do you mean by that?
Yeah.
We're doing a bifurcated fund. So we're focusing on two different asset classes that are on the way end of the spectrum, but it's designed to create a shorter timeline as a fund. Most funds, as you know, right now in traditional VC has been returning 10 plus years. A lot of criticism. I'm 35 in a few days. I don't want to wait until I'm 50 before I have any kind of return.
Yeah.
This fund is designed to return around 5 to 7 years, which is super short. The one thing we're highlighting though in crypto and in blockchain, so we do look at different categories. Crypto and blockchain is one of them, is really exclusively in stablecoins and the boring tech layer stablecoins, which is actually the app layer.
Okay.
So when you think about it, there's really no innovation needed, right? There's a lot of TradFi things that are just being mimicked in stablecoin, right? So think payday loans, right? Forex, right? Business lending, even neobanks for people who are historically not able to get bank accounts, right? Those kinds of things we love, and they're just app layer. People like to criticize the app layer, but I think the app layer is where the exits are going to happen because you have a lot of incumbents like the big banks that are not going to build a payday loan service on chain, right? And are going to be able to do this by just buying a company that's been building this for the last couple of years maybe. So those kinds of quick flips, those base hits, those are the types of companies we're going after.
Yeah, so it's like a barbell approach, right? Where it's like you've got the extremely early kind of pre-seed seed companies and then these large kind of proven Goliaths looking to have one more fundraise before they really...
Well, that's more in secondary. So we're actually doing it to find these companies that may not have become like an Anthropic or an OpenAI, which by the way, there are many, right? So a big bulk of capital is focused on those guys, but there's still 100 plus companies in the 10 billion to plus valuation. Some of them have not been doing so great, at least perceived wise, but their core fundamentals are great. And there's a strategy behind that. If we buy into the secondaries direct and we're able to build the relationship with the companies, there's actually a direct relationship to buying the companies we're funding in the early side. Right? Because these guys need to catch up. They want to buy talent. They want to buy good companies that have that innovation down pat. Because the issue we're seeing is a lot of companies spend 5-6 years building stuff right now, which by the way, in a month or 2 months, God forbid, AI could just build on a tech standpoint, right? So it's the go-to-market moat that really is what these guys are highlighting because they're early and they might have come from these places. So we're seeing a lot of founders come out of the banks that left, right? That are starting these things because they know how to do it. They can create a private credit product on chain in 2 seconds and then get it in there. So that's the goal.
And so I saw a tweet from Chamath talking about, I think it was like the 7 most valuable private companies, and he was like, I invested in 2 of these, or sorry, I know 5 of these. I invested in 3 of them in the early stages, and then I bought secondaries in 2 of them.
Yeah.
And he was like basically going on to say that as an investor, you clearly can't win everything. You can't get into every deal in the early stages. But the point was, as an investor, you also have to recognize when you did make a miss, and you have to be willing to kind of put your ego aside and be able to buy these things at a much higher valuation than probably the first time that you saw the deal, or the first 5 times that you saw the deal.
100%.
Do you agree with that?
100%. And that's why like secondaries markets have been blowing up lately. But I would say again, I always run a different direction when I see a lot of people running another way, right?
Okay.
A lot of people are like, I want to get OpenAI, I want to get Anthropic, and da-da-da-da. And these things are valued at insane, I mean, 600 billion, 700 billion, $1 trillion. It's crazy because you're thinking the public markets need to withstand sort of 3 major IPOs, and everybody knows these companies at $2-3 trillion. So you're talking $9 to $10 trillion that were needed in this public market cycle of these guys going public, SpaceX, OpenAI, Anthropic. And I just don't think the market will be able to hold that. And the market will also need to do that after the lockups end, right? And so I think there's, again, I'm advocating, and you know the theme now, of these not necessarily the top of mind guys, but they're also building, I mean, I'll name some like Canva, Rippling, Gusto, right? In the crypto space, Kraken obviously hasn't gone public yet, but Kraken is, one of these guys that we want to win. They have to win for us to see another boom to the VC world that has bet so hard on these guys. Recently, obviously, we had like the BitGos and the Figures of the world go public, but these types of, or Figment, these are the things that we need to have successful. So.
Yeah. On the specific to digital assets investing side, you mentioned kind of the neo-banking, the stable coin side. What is your thesis here? Like, is it really just as simple as democratizing access to US dollar savings and then the US dollar savings rate globally? Like, is it really as simple as giving more people access to the dollar at scale? Is it a payments thing? Where, how are you thinking about these things from a thesis perspective? And then where are you seeing like the business case for investing here?
You're absolutely correct. So the access to the dollar is obviously a big one, but everybody knows this. We're looking a lot at, again, these kinds of products that are catered towards people who are historically not given a lot of these kinds of products. And this comes from corridors that are emerging, right? So this could be between 2 countries that are typically, again, not really served, right? And it could be from corridors that are emerging and rapidly growing, right? Like this is not a company we're gonna invest in, but there was a company that I recently met that does something specifically for Venezuela and the US, right? Let's just put it that way. And again, if you really wanna bet on that, you think about how Venezuela could actually in the future become a part of the US economy, right? Like what does that look like? And this is all completely apolitical statement, right? It's just like, these are the things that are worth taking into account. So emerging markets are super interesting because the way they adopt these products are very different than we do, right? You and I, much like if I were to use the comparison of desktop PCs to laptops to smartphones and tablets, we went through that evolution. But in emerging markets, right, they went straight to the smartphone. They went straight to the tablet. They're digital natives, which is why live shopping, all sorts of different trends worked there really well. Live shopping, like the QVC evolution that we thought was going to happen, right, where we could just watch a live streamer talk about stuff and buy from them. That's not happening as big in the US as it is in Asia, right? And there's certain markets in Asia where this is blown up. The same thing happens with money. Right? When you look at their first access to a digital dollar, they're not getting credit cards. They never had credit cards. We were thinking this is normal for us. But for them, what is the concept of credit? What is the concept of spending money? As you know, in a lot of these markets in Africa, for example, the main currency has been for a long time your phone credits. Literally, you could get paid in how many credits I could get for my phone. I don't know if you knew this, but it's like literally getting more minutes. Was a currency in these places for a very long time. So currency is different in how they perceive it. So these markets are better because, in my opinion, the extreme exponential growth curve rates are more possible in these markets where adoption is a lot more likely by people that didn't have something that they had been used to before, right? And that to me, but we're borrowing from concepts that have worked in America and other developed countries where we know that people will respond, right?
Right, yeah, actually, something that the audience may not really understand as well or pick up, intuitively is that the adoption of a lot of this tech is actually happening faster in continents like Asia.
100%. Yeah, 100%. It's because there's no preconceived notions. There isn't, I used to use it this way. right?
Yeah.
Like, it's funny because like, when we used to text with our like the numerical pad where you had to press the button, that was because we had to learn that and then jump in. But if the first thing you used was a full keyboard with your thumbs, right? It's that kind of thing is what we see with these regions.
Yeah. Interesting. Okay, back to some of the macro stuff here. So you think that those OpenAI and Anthropic rounds at the $380 billion valuation for Anthropic now into the 700, OpenAI just raised that 820 or 850 billion. You think those are just drastically overvalued and that the market won't be able to kind of manage the float on IPO?
I'm not saying they're overvalued. I'm just saying that the markets need to be able to provide the liquidity for the people that have been waiting quite some time for that, right? And we saw recently that cap table published of OpenAI and the early investors and all that. Go Ashton Kutcher. Clearly, he did very well, and Guy Osiri. But the thing is, there's this dynamic that I'm observing around liquidity, and this has really been the complaint for a very long time with ventures that we're waiting for liquidity. So these three events are a big deal, right? Because they will return a lot of liquidity to the markets. However, what I'm saying is there are companies that are probably that don't require that kind of liquidity event that will still IPO, that will do well, that you can still play in, right? I think what's happening is because of that, I just had this conversation earlier today, I loved it, this crazy need for energy, this crazy need for capital to buy chips is really only important if we believe that the outcomes that are a result of these inputs, so inputs, outputs, the outputs actually matter, right? Right now, there's still a big question mark, right? We know AI is incredible. Are the outputs really giving us that commercial use case that people see that will warrant those valuations? So that's where we do the calculations on valuations. Like I don't know the answer to that question, right? Because like the jokes you see online are always like, the amount of lakes we've drained just to have people make cat videos. What is that going to actually mean in the long run? And the beauty of markets is it will always figure itself out, and the markets will rationalize this, right? How much commercial output is coming accretively to the rest of the world that's adding real value to yours and my lives that actually lead to more commerce as a result of this crazy equation that we're dealing with here? Because the inputs are really energy and chips, right? And then the reason why this is happening, and people probably know this or don't, is that the investors that are already in, of course, have an interest in telling you about how pervasive AI is going to be. Everything's going to be AI. And I do believe a lot of things will be AI. And like with anything pendulum shifting, everything will shift over, try to come back. But usually in the world, in human progress, what's beauty about our race is that it'll always bounce back just a little bit ahead of where that equilibrium was before, right? If you think about it, like the internet did that, right? It's not like everybody, everyone's like, oh my God, when the internet came out, everybody was losing their minds, right? But of course, everything kind of snapped back here. We're snapping back there. But on the other hand, there's a lot of other things happening. I don't know if you knew this, but vinyl record sales hit literally a record, pun intended, last year. Right? It surpassed CD sales because CDs were dying anyway. But like there's a lot of analog stuff that's happening right now that's like showing how the world will always have these kind of snapbacks, these balancing acts. And I know it'll bounce back here, but how much of that hop ends up happening net after everything calms down, who knows? And that's the exciting part about being a more long-term thinking investor.
Yeah, man. I mean, we're seeing a return to in-person experiences.
100%.
Like these kind of gated, exclusive events, in person, face to face.
Clubs have never been hotter, right?
Really?
Like members clubs, right? You've heard of all the new ones, Chez Margot, like ZZ's, all these.
Chez Margot's great.
Exactly,
Great
right?
spot.
Yeah, because then there's
spot.
now clubs that are starting to lock your phone up, right? Like San Vicente bungalows, right? So these guys
like Berlin
are,
style.
these things are starting to create a new dynamic where I think the luxury is to not need to be connected and tied to these things. But again, like I don't want to sound like a Luddite. These things will always be around and they will always create a lot of progress. It's just where does it snap back just a little bit ahead of what it was before.
Yeah, and I mean, the question of what are we producing for all of this consumption of chips, of energy, as you say, that there's Elon's posting like some weird form of hentai on X as a means to trigger grok.
I don't think people understand though the scale. It's funny, like I don't know if people pause to just think about the trillions, right? Like and remember when Instagram got acquired for $1 billion? Everyone thought that was the equivalent of like $30 trillion today. Yes. Like, it just felt like a lot of money.
Yes.
Right? And that wasn't that long ago, right?
Yeah.
And when you think about it, we're just not fully grasping. I think most us mere mortals are grasping just how much money is being moved back and forth on these things, right?
Really?
Meanwhile, we're fighting on $5-10 million venture rounds, $20 million venture rounds, which now kind of sound like a joke.
Yeah.
And then meanwhile, there's like, a couple $100 billion being raised on a regular just to fund these chips. So the scale is a very different conversation.
Yeah. The scale of the average seed round,
correct,
in AI and in AI venture has just gone astronomically large.
And the expectations are actually squeezing out those who are trying to innovate. And let me explain why. Because of Cursor, the expectation is now you need to do 100 million in a year, basically, right? Like it's crazy. And what if your AI company doesn't do that, right?
Yeah.
Like what if you do 20 million in a year? You should be proud of yourself, but that's not enough.
100%.
I just met with a founder a couple days ago, he exited to another AI company. I invested in him a few years ago. And he was like, my gosh, what world is doing 20 million in ARR like a bad thing? Yeah. But meanwhile, they did burn 32 million to get the 20 million, but that's not like that crazy bad, right? But like the bar has been set so damn high though. And this is the worry. The use cases now that people are going for are going to, sort of try to whittle to that, like, where's the fast money, right? Which is the vibe coding, the whatever seems to be trendy. But I want to look for long-term gains, which is why another thesis I did post, and I do want to share with this with the audience, is the fact that I believe that services businesses, believe it or not, which have been poo-pooed by VCs for quite a long time, right?
Entirely.
Like, don't do services.
Yes.
Is making a comeback.
Okay.
But the perspective is different, right? I don't know if you saw the YC memo that was kind of leaked. It was like about what they're looking at now. They do talk about this, which is the return of services, but really rather than providing individual services, you are the service.
Okay.
If that makes sense. So you're literally like an Accenture and a McKinsey and a Bain, because they're so damn big, they're doing everything for the clients when they come in, and it costs a lot of money, right? But when you are a startup that has, let's say, I'll give you an example. Let's say you're one of the companies we invested in is called Nexa. They do agentic AutoCAD, so it's a 3D software for construction, right? Historically, it was like, hey, log in and do your thing, use the SaaS software, and we'll kind of train you and whatever one time and hope to God that you end up knowing how to use it and you keep using it, right? That's the premise of SaaS. But now, because of agentic, I can actually provide you the service of walking you through it, right? Doing the actual work for you. And it's just as automated as it was before. So this whole army of consultants that you would have needed doesn't need to be there. And the cost basis is not the same. So you actually are able to provide that service. So I think if there's a vertically oriented business, again, could also be in stablecoins. Let's say, again, you're creating a agentic layer for stablecoin transactions to clear them for risk or whatever it is for small businesses, right? Like for fraud, and you run it, the whole thing just for them, the banking layer, including accounting, tax, blah, blah, blah. And it's all in one service. That's like Brex with stablecoins with a service agent built in, which could be what Erebor ends up doing, right? When they end up rolling out their products to a wider customer base, is massive, right? So the expectation now is that services will make that comeback, but it'll just look differently than what we were trying to avoid before as VCs.
Right, because the frame of thought around services was scale your offering, scale your services, scale your team, decrease
well, then it's
your
linear
margins.
Well, it's linear growth.
Correct. Yeah, but that's been broken now.
Of course, because there are things you can, again, the agentic orchestration, right?
Yeah.
Again, I think the biggest profit margin companies will be agents that help you put together agents, right? Like a network, your network of agents. Because most businesses, let's be honest, we think America, well, we're in a bubble, right? Like you have to admit, right? We're here in New York and there are people in San Francisco and LA. We think our commerce sort of behavior and etiquette is the same as the rest of the country. No, there are people who are busy building companies that are, doing construction, doing, garbage disposal, doing carpentry, factories, industries. They don't have that time, right? So if you orchestrate those agents for them, they are able to do it without even thinking. And this is also where we then creep into promptless, which is another big area that we're looking at as well as a firm. What are things where the prompts are not required anymore, where the AI is prompting you? It's a big deal. And this flows into crypto land.
OpenClaw really shifted that too, because it went from this kind of, a lot of the previous iterations of LLMs or just any sort of chat flow was very kind of like descriptive and like giving you you have to tell it what you need it to do versus like prescriptive, like here's what you could do and like, do you want me to do that for you? That flip is, once you kind of experience that flip in terms of your usage, you can't go back to what you were doing previously with the basic LLM. And so
but commerce, like we don't scale agentic commerce if I have to tell it to buy things every time.
Right, exactly.
Agentic commerce only grows if it's buying for me.
Yeah.
Obviously in trading, this has been the case for a very long time with just, quant firms and algo firms. But when you think about consumers and their access to buying products, I had a friend again yesterday at dinner. We just talked about it. He has agents doing replenishing of home goods. It's that simple, right? That's very simple. Sounds innocent.
Yep.
But it's a big deal, right? And the thing is, without it needing to prompt you in buying things and then using, obviously, the ramifications here, using stable coins to transact and to buy things for us is the wave of the future. And I do believe that that's a big area we should be focusing on.
Yeah, so let's get into this prompt list kind of investment thesis.
Yes.
So we've had this era of LLMs that have been prompt first, right?
Correct.
You are specializing in the ability to prompt.
Correct.
Such that you're trying to optimize for the correct result with the least amount of back and forth.
Yes.
And headache. And for so long we had just like, that's not, like it's just this constant kind of battle.
Yes.
And so promptless, talk me through the functionality here. What does that actually look like in practice? Kind of let's understand that, and then let's get into some of the thesis on the investing side.
So Animoca created a product called Animoca Minds recently. Not a lot of people know about it. It is their effective version of promptless, where you can put together a lot of agents that work together. And agentic orchestration is the equivalent of promptless in V1. But I'm going to take it a step further. It's really funny, though, that as human beings, we have built this incredible AI, and the only way we can really communicate with it is through these lines of English, which, as you think about it, language is also I just be very philosophical for a second. Yeah. It's a very inefficient way to communicate, right? Think about it, right? Like me is basically a bunch of fleshy, bones and cartilage in our mouth making vibrations to communicate with you. If you think about it, we talked about it. You and me are doing this. It's gonna take us like 30 minutes to communicate something that a computer could communicate. Theoretically, they can do like that, right? Yeah. So my belief is where the best promptless is having the best access to the right data sources at the right time, right? So setting up your data so that like when you set up your OpenClaw, right, you obviously want to make sure that it's pretty guarded, right? Like it's in one little box, literally. But you're feeding that box with things. Like you have your file and directory structure in a way that you think OpenClaw will be able to understand and be able to parse through and then be able to do the things you want it to do. So if you think about it, it was the setup of the data, of what it's reading through, of what it's being trained through, that is making it do what you want it to do without it prompting you, without you prompting it, or it prompting you, right? And then, of course, you teaching it that, if there are moments where you need to ask me for clarity, you should be, right? But that's really where I think the future lies. And that's why these data cleanups, data dictionary, data consulting businesses are still so powerful. And also where your sovereignty comes from when that data is key. Because once we get into promptless, how clean that data is, how comprehensive it is, right? How much of it you own, how much of it you can use is going to be the key. And will continue to be a massive part of the business. Like it is again, it's the LLM, but it's almost like the LLM was trained on the patterns, right? Which is what the GPTs were on before. The new patterns still come from the same data sources, but you need it accessible so that when it's trained already, now it's able to do the prompting again back to you. And I think we have to also get our minds out of this equation that we think is like cause and effect. Me give it something and it gives me something back, right? When you think of agents having multiple work streams now, it's just like the world, right? It's not like I asked the world for one thing and one thing only. There's a lot of processes happen, like just getting your Chipotle burrito. A lot of processes already happened before you came and prompted it. So when you think of your life as that, where there's a lot of processes that are already running and then that prompt was a result of all those things, that's how you think about the kind of agentic, non-prompt world and evolve from it. But I also believe there's a lot too much going on. You can overcomplicate it, right? And I think making sure that you only kind of build in your own life that hierarchy of things that can be impacted, and then yet not using it as a crutch is the reminder I give to younger people. Because one thing that you and I hope you're not that much younger than me, then I feel bad. But like the idea of if you don't use your own mind to initiate thoughts anymore, you actually lose your only reason for existence as a human being. Like initiating true, clean, pure, uninfluenced thoughts is really quite rare, and it is really the essence of being human that I think we should try our best to preserve. Yeah. Wow.
Question on kind of like how you have people thinking about prompting and then prompt list transition.
Yes.
How do I go from like a habitual execution of a prompt to get a result to operating now in a more promptless world? Like what does that transition end up looking like for like the end user?
Well, in my world, we're finding businesses that don't want to be bothered with the idea of needing to prompt all the time, right? So when you think about it, there is a company we're looking at that is mainly doing promptless executions of experiments of growth and marketing just for small to medium-sized businesses. So you think about lawyers, accountants, sort of practices, like you could even have like a dry cleaner, whatever it is. But what are things that they're doing? But they don't have the time, again, they don't have the time to think of the prompt. They don't even want to bother learning how to prompt, right? That's great. Within your own business, however, there are things that are similar. What are processes that just should be automated, that should be constantly analyzed, right? This could be employee satisfaction. This could be treasury management. It could be taxes and expenses. These things that actually, as a CEO, because I was a CEO for like 10 years, like what are things that you're constantly needing to think in the back of your mind that you really don't need to be consciously thinking of and that you wish you had someone doing? Those are the things that you regularly want to have this promptless model working off of, right? And again, this will become more popular. I mark my words, I do believe both Perplexity Computer and then Claude Work, Cowork, eventually all these things are going to have promptless models that are running in the background that are again working on tasks that you've given it as an ongoing thing, and then it essentially being a human being that can improve, give you suggestions, you can talk to it, that kind of thing.
Yeah. And when people are using these kind of more promptless models, are you seeing a world where there's kind of like parallel workflows happening for all parts of someone's kind of like, let's just focus on the business side. Like, is this like a set it and forget it like type of thing? Just like talk to me about how you actually like give us some concrete examples here.
Well, remember the last time you let your AI just run free and then not monitor for a bit? It's disastrous, right? Because this thing still is a little bit like I would say it's still like an undergrad is really you think about undergrad, a lot of knowledge, execution poor, right? Still like I gotta check in with my prof, right? Tangible examples in the businesses where you're running this stuff. I think we need to overcome this trust gap, which still exists with these models, where I've tried many times to be super clear in making sure that everything's set up the way it is, but it will break. It will just and then needs you to clarify and step in, which sometimes the sort of conspiracy theories, this is built by design so that we do have this natural, sort of workflow where we're used to checking in, right? Because if we just let things run right now, I don't think these AI companies will ever admit that these things are, going to work without error, right? And then unfortunately, if this starts to automate things where errors do create catastrophes like air traffic control, God forbid, we don't want these things to keep. So I think that the relationship we have with these machines where we have to check in once in a while is still pretty important, right? So again, down to the business layer, if it's employee satisfaction, if it's checking in with goals, right? And checking on performance. What if it calculates bonuses wrong? What if it looks at progress and counts something that wasn't counted, right? And people naturally want to game the system. So you do want to be a part of it so that, again, the human input that actually matters, which is knowing when people are trying to trick the system, really counts here, right? So it unfortunately goes back to human fundamentals. Where will there be gaming of the system? Right. And how do you prevent that from happening through check-ins? And ultimately why I think, again, the valuable skills that will still be required at AI land is still discretion, ethics, morals, logical thinking, and creative thinking. Those are the things, and then questioning, right? Those are the things that will always continue to remain valuable in this growth area. Yeah,
I think it's fair to say that if you think about things in this lens, right, with just the actual state of how these tools can be used, there's, we're kind of calling them an undergrad here, but it's going to get to a postgrad and it's going to get to an expert level.
It will.
But even still, I feel that it's accurate to say that the AI is going to take all of these jobs claim is still very, very far-fetched in the sense that I don't view it as a replacement of someone as much as I view it as an amplifier of someone's already existing expertise or skills.
Yep.
Do you agree with that?
I completely agree with you. And the moat here is people still don't realize that AGI is like a decade away, right?
Okay.
Like some people are saying it could be shorter, but latest, it could be 10, 20 years actually even, right? But what do they want us to think? They want us to think that it's closer. They want us to think we got to pour in, hundreds of billions of dollars more to keep this kind of, thing going, right? Yeah. And so again, that AGI is a replacement of critical thinking and thought, which is really where what I just said is pretty important for us. Now, I don't want to be in 10 years like eating my words and be like, oh God, like I'm useless now. I'm basically like a piece of flesh that's just roaming around on the earth.
Yeah.
But ultimately, that is what will preserve that important part. And then like, again, with every crazy prediction that was made, oh, the internet, well, we won't, no one need to travel anymore, right? Because we just stream video and da-da-da. It's like, no, people are still flying around. Like this will never be replaced. And then the trust factor is one thing I will point out. Trust is built through in person, right?
Yeah.
It's a very, very untouchable je ne sais quoi kind of thing about human beings that you cannot really explain. That will always be needed. And so I think there's going to be that luxury of like, how did I build my relationship with you before, right? And so there's a lot of people that I've known for like 10, 15 years that our trust actually seems to be compounded more by the fact that there's so much reliance on this virtual connect that the fact that we had in-person experiences before is actually compounded. It's making our relationships even stronger because now I go, oh wow, this person I actually shared, I broke bread with them.
100%.
We spent a lot of time together. Even it was literally just like meetings in person because we were in an office back in the day because our office actually used to be one of my last companies was a couple blocks from here was about that just seeing that person and I think that it's so simple but you can't look at an AI in the eye.
Not gonna
happen.
So then if we're of the understanding and agreement there, what would you recommend to people who are watching this who want to get more from their people that who have folks in a variety of different parts of their company, or who have or who are investors who want to get more from their founders? Like when it comes to actual like implementation of these tools, just like generally curious how you're thinking about like the progression that you're seeing founders, companies, staff, employees undergo. That is like the most logical and thoughtful progression in using these tools.
Easy. So obviously offer to subsidize and fund, all the subscriptions. That's one, right? Doesn't matter which one, just go nuts, try them, have fun. Number two is actually agentic day, right? So a lot of my companies, I've seen them do this where we spend a whole day, build your own agents, have them work with each other, have a task that's an outcome, and then give it a whirl, right? This is the equivalent of back in the day when it was like build an app. Right? Everyone's like, go and just do an app or build a website. Just do something just so you can test it, feel it, understand it.
Sure.
Does it need to be a part of your everyday life? No, right? But of course, this at least gives them that taste. And then a lot of ideas will come out of it. The other thing is having the engineers and the non-engineers interact on these things.
Okay.
Right? So hackathons where they work together for a mini business outcome. That way, the crazy stuff that the engineering team is starting to touch, and I can confidently tell you, 100% of engineers right now, hands down 100%, are using AI to write code.
Of course.
And they're really just proofreading it, right? And QAing it. So to me, it is really about accepting that it is inevitable, right? But making sure that people don't use it while being lazy and then having a crutch for it, right? But then also realizing that quantity is not the name of the game, right? Like Claude Research, super good at giving you this entire list of stuff, right? But you still have to filter through it. You still have to use your brain. Don't use it as a crutch, right? But it really is a soft thing, and as a call to arms for all humans, is don't that really kind of, and your devil and your angel on your shoulder be like, oh no, just use the Claude to check it, or just use Claude to prompt the checking of the checking. Don't check the checking. You should do the checking, right? Because at least you using your brain there, right? But you've had to like, hey, just clean it up for me. Like, no, you clean it up, right? But so in the moment, use your brain for something, right? It's the meta use case of it is really dangerous because then we become literally like an idiocracy. Like I worry that we all become vegetables because we're not. It's atrophy. It's neural atrophy.
Really?
If we don't use our brains,
man,
think about it.
When you combine that with the consumption of short form content, as well.
We're all just brain rotting. But that's literally the definition. But even this, like mental math.
Yeah. Okay.
Let's just use that as an example.
Sure.
The ability for people to do mental math has like declined drastically, right? Since obviously iPhone calculators and just us not. Why would I need a calculator? I can just do whatever, right?
Sure.
But there's a reason why mental math, and I don't want to make this a race thing, but why as an Asian, we were like drilled to I know, I'm sorry. We memorized everything mental math wise. I know. But there's a reason. I know.
Dude, I'm so dead. It was the Asians and the Indians. I would be like in the 90s, 89, 92 range, and then you guys would come in at like 97 every time, and it'd be like, what the fuck's going on?
Well, the mental math was actually not about route memorization, which is what I thought it was, and I hated. I resisted it so much from my parents. It was actually being able to understand why having that part of your sort of daily so when you're doing a math equation on a daily thing, like tips, simple things, right? Or like, oh, I'm calculating a few days out or whatever, dividing things. It's always part of something grander. So if you can shorten or make a heuristic of one part of it, you then become just more efficient, and you understand that piece is something that you actually had to do the actual mental work on. So I think understanding how the sausage is made in that way is really still important. So that's why I think, having actually most of your employees take a basics of LLMs and understanding how, GPTs are trained models. Literally, they're trained from previous, generative ideas. That's what GPT stands for. That was something that people should understand, because if you don't, then you don't realize everything will revert to a mean until AGI completely comes out, right? So reversion to the mean is terrifying, because then a lot of the ideas and concepts end up being kind of around that same thing that was based on popularism. And we're trying to avoid popularism in the first place. And then also you have to understand these models were trained to please you, right? They're trained to make you feel good, right? 100%. So now we have people who have no idea of actual proper constructive criticism, right? Because the guy that I'm talking to, or the gal, or whatever the gender is of the person I'm speaking to on my chat GPT, is never gonna argue with me or tell me straight up that I'm being dumb. Yeah. And I think that's why we need to bring back bullying. I'm kidding, but like, yeah.
Okay, so on the LLM psychosis point, are you actually worried about that, right? This idea that you get this psychosis from that grandiose treatment from these LLMs, and kind of always being told you're right, all the way to the point that I've seen tweets that are like, your worst enemy is a narcissist and is getting told on ChatGPT right now that they are so right and that they're perfect or something. Yeah. Like this psychosis of treatment from these programs, how bad is it?
I think it depends on the maturity of the individual, right? And then how much of the world they understood, or how much they developed in a world that was pre-AI, right? Okay. And like you and I, we had a world where we do expect, healthy discourse, varying opinions, different kinds of discussions that are part of ultimately informing you, right? The reason why I have these discussions with people who disagree with me is because I want to learn, right? Not because I want to get into a fight, or just be combative. And so I think that's the issue, is like, if the ultimate objective is to learn, then that's really great. But these AIs are not designed to do that. They're designed to make you happier, because that way you keep using it more and they get more money as a result of your usage, right? And so this, to me, I mean, obviously usage is not tied to the amount of money you're paying it, but you get what I mean? It's really this drug. It really always comes down to that, right? What component of that digital service are we using that gives us that dopamine hit, right? And then on Instagram, of course, it was the likes, it was the comments, it was the friend requests, it was just the fact that you felt like you were loved, or that people paid attention to you, where default you couldn't dislike anything, you just like everything. It was always about positive, right? So of course, we all know that this dopamine hit comes from that, right? So I think we just have to be conscious of it. And that's why I think companies, and so this is another thing that we've been looking at, and we actually invested in a company we haven't disclosed yet that does AI ethics. Okay. Right. So this idea of deepfake detection, right? Understanding if this is actually biased, if the output of the AI is biased, right? Like if it's discriminating because the people that were prompting it were discriminatory in the first place, but now we're a degree removed away from it, right? That obviously I prefer this kind of employee, but now, and there are AI, by the way, they're screening employees now, or prospective employees in hiring processes. These kind of biases, we have to systematically go in, unearth these issues before they get too crazy, because then everything's going to shift slowly and slowly. It's frog in the pot. We will all get boiled alive if we don't try to stop these things from getting too far, because we will not realize it once it's gone all the way out here. The concept of an Overton window, I'm sure you might have heard of that concept, maybe people not, but the fact is we live in a shifted Overton window now, because there has been a lot of extreme conversations about extreme things that now seem normal to talk about, right? Yeah. And yet, 10, 15 years ago, we would have never talked about that. We would have never fathomed that kind of conversation publicly.
That is the thesis of many different products and companies that have grown substantially.
Yes.
Anything from like a Hyperliquid that offers 24/7 trading because the amount of headlines are just absurd now,
Yes.
all the way to like an AI ethics company because of bias response based on traumatic life events from an individual, and anything in between. It's just this Overton window has shifted. I saw a funding round for a NSFW AI protocol yesterday. You can take a photo of yourself naked, put it on there, and then you can then go and basically pimp yourself out in the AI world as like an emoticon type of thing. Are you worried that people aren't having as much sex because of AI? Like,
well,
do
we
you think
do know
young
that
people
the
need to have more
fertility,
sex?
it's not fertility, but the birth rates in certain Asian countries are declining. You have Singapore paying couples to basically have kids. The fertility and birth rate issues are real, right? Because if we stop, having next generations, the entire society is messed up, right?
Yeah.
So there's a lot of other things that I don't even understand that will happen. Go ask an economist, I'm sure, well, more so a sociologist. But these kinds of things are, pretty scary. I also think that we have still this extreme end of the super rich and the unfortunately not so super rich folks, where if you have too much money and you have too much knowledge about this kind of thing, you're actually disincentivized to have kids because the world you're bringing them into may not be the most ideal for you and what you want for them. And then those on the other end know that they need the extra hands, the extra pair of feet. And so they want to have more kids as a result of that. So I think we're going to have this, sort of divide. I don't know what that's going to look like. A lower population of those that are on the upper ends of society. And then on the other side of society, you have a lot of people, but not a lot of enablement. And that's why, I mean, this has become a very philosophical conversation, which I love, by the way, is the fact that education and really using our minds to rethink the education model is still pretty real, right? We had the alt school, we had the Ed Astras of the world, but that wasn't a full experiment that went through. As if you recall them, this was Elon's school in the Bay Area, which shut down. The thing is, no one's really sat down and said, hey, this industrialized educational thinking that we've really done, like this elementary school, middle school, high school model was for the Industrial Revolution, right? It was to put people through a conveyor belt like we were doing our products. And we're still thinking the same way. We're still assuming we just shove kids in a school where all the professors have actually never held a real job. No offense to professors, still love you guys, but like a lot of them have not actually held real jobs in the real world that are teaching kids about the real world. And there are schools that are better now that are having, actual faculty that came out of the real world that I think is still required. But the curriculum is not catching up, right? They're learning on their own. That's why people want to drop out. And that's, for some reason now, that's become a mark of like, like a bragging right that I dropped out. Exactly. Because it wasn't serving you. And I think this system is not serving a lot of kids that have that critical thinking, that do know that by the time you're finished learning, right, the stuff you were learning is not even relevant to what the world is like after 4 years. Like 4 years is a lifetime, an absolute lifetime.
So, do you have kids?
No.
Do you want kids?
Of course.
Will you put your kids in public school?
Probably not.
Will you homeschool them?
Probably. Yeah,
really?
Yeah, I would find a school that I know of and have friends that have sent their kids to schools that I've looked at that I think would be great. Now again, I'd have to be a billionaire to send them to these kids, so I got to these kids to this school, so I have to work a lot harder.
A couple more investments, man.
A couple more investments, yeah. But I'm not quite sure actually. It's really tough because I would rather, like, I have a niece who's turning 6, and she's got an incredible reading comprehension now. I don't know if you have kids or nieces, or nephews. Are you? Yeah,
I am. I'm 26.
You're 20. Okay, so you're 20. Okay.
Yeah.
The thing is, they're growing up much faster than we did, right?
Really?
Like, and they're maturing much faster than we did because reality of the world is much more upfront, right? Like when we were younger, because we didn't have that right in front of our faces through screens, right? We had to go and actually see it, right? Mom and dad took you to somewhere to see it, right? Yes. If you're at home, it wasn't here. Now reality is so close in proximity. They know they need to grow up faster. This just happens subconsciously, right? And this is not just me observing. This is a well-documented thing. And because that's happening, again, I don't know what the ramifications are for the kids later on, right? Because now there was no period of innocent play. And we all know that play is a great way to develop your critical thinking, right? Unstructured problems come 100%. From play. A structured problem of, barrels of oil are now over $100 because of a war. is a structured problem that is placed in front of you that now you are faced with some type of thing you need to try to come up with a solution for. Obviously not to the 5-year-old, but that is not a result of play.
No.
And so I do think we're losing play. We're losing the sense of fun.
Yeah.
You know, again, I'm not trying to bring all these crazy conspiracy theories, but there was this, you know, there's been a theory for a while that the world ended in 2012. I don't know if you saw this, and then we're now living in the Matrix.
Yes.
Obviously, I don't believe that, but I do believe that there was a shift. It could have been technological, could have been just collective neurosis, I think it was neurosis, of this idea that we are no longer having agency over our own thoughts because we are so plugged into this nonstop information stream that the moment of pause, just having 5 minutes to meditate. So I meditate daily. But I only really can afford 5 to 10 minutes, but that is more than enough according to my therapist. But the idea is because you can create this peace and calm for your brain to rest, for the thoughts to rest. Much like how you can't weightlift, you know, nonstop. You have to give yourself breaks.
Some rest.
HIIT, as high intensity as it is, still has rest.
Of course.
But we are not giving ourselves those intervals to rest.
Not our brain.
Our brains, and it will fry our circuits. And it's happening already. That's why the number of people that need therapy or have, like, you know, antidepressants or drugs in general is not a result of, I think, anything but the fact that our brains are being fried by just everything being nonstop. So I think slow and dedicated is what is important for us right now. And we need to be disciplined in that regard. And I unfortunately do not think that when you're young and you're impressionable and you don't understand a world that was before this, you have that discipline.
Yeah.
That's the fear.
Yeah, man. Whenever I find myself in that state, I often just try to go to a place where I can surf.
And you have that.
Yeah.
You have that place of peace.
Yeah.
And I think I urge everybody to find those
like
moments, those places of peace. You don't have to be working 20 hours a day. In fact, in our fund, again, not to do another promo, but in our fund, we actually pay for people's gym memberships and their therapy sessions if they haven't done it before, right? So the idea is to turn them on to it, right? And we want a sustainable founder, not one that is trying to burn the candle from both ends. And I learned this personally the hard way, right? I was a founder, like I mentioned, with 2 companies, and you know, I was destroying my body, and that's not sustainable. And what for, right?
Yeah, for
like
what?
exactly. There was no actual outcome, even financial, great, but you don't want to have all the money in the world and not have the body to enjoy it in, right? And people always tell you, is that if I gave you $10 million today, but the only requirement is you wouldn't wake up tomorrow morning, right? You would never take that 10 million. You want to wake up tomorrow morning, right?
Sure.
And so that tells you how much your morning is worth.
Ladies and gentlemen, Brian Wong, what a conversation. Got quite philosophical there. Thanks for coming into the studio,
Thank you, brother.
man.
Appreciate
Guys,
it.
we'll be right back. Alrighty, guys. Seraphim, welcome to the Tokenization Tower, man.
What's up, mate? How you doing?
I think you have the best outfits in all of crypto.
Best or worst? One of the two.
Yeah, I mean, it depends who's asking that.
Yeah.
So you're in New York for a couple of weeks, couple of months.
Well, it's supposed to be 2 weeks. I'm based in Dubai, and then it got bombed, so
yeah,
it became a bit longer.
That happened. I forgot about that. Any updates there? Are you able to go back anytime soon or no?
Should I? I don't know. I'm actually considering relocating to Singapore, so we'll see. If
Nice.
bombs are okay, I guess, but I don't know.
Not your cup of tea.
Not my cup of tea, though. No.
Well, congrats on the new role. Solana is lucky to have you. I know you had some good tenure at Athena. I want to talk about that a bit. I want to talk about Solana a bit. You're doing some interesting yield acquisition stuff over there. First and foremost, man, you put out this crazy tweet saying that Ethereum is cooked, that the Ethereum Foundation is cooked, and this was like your introduction to Solana. What was going through your head when you started that war there on Twitter?
Not much, apparently. I got into a lot of trouble back then, but to be fair, yeah, I thought I just wanted to grab attention, really. That's just a good way to start things. And I think the ideal way to do business, in my mind, is you catch attention, even if it pisses people off, and then you channel it into actual business.
Yeah.
And that was an attempt to do it. I don't hate Ethereum people.
No.
I don't know what the fuck they're doing all day, but you know, like, I don't hate them.
This fucking guy. So we had Logan Jastrzemski, the Frictionless Capital co-founder, on the show yesterday, talking to him about Hyperliquid versus Solana, and just kind of talking about the landscape of trading being the core driver of value on blockchains. Really, that execution and trading is where all the value is happening, and that was his initial bet for Solana on the spot side. Hype's obviously kind of grown on the perp side, but you know, we kind of came around this idea that the L2 roadmap was a complete disaster. It was just data compression, and that trading is all that really matters. And so we kind of talked about that, and then I asked him about perps, and I think this is a hard question to start about with Solana, but like, I asked him this, and I'm curious your opinion. I was like, should Solana just give up on perps? Hyperliquid's clearly winning. Lighter's doing well. There's these very specialized infrastructure environments dominating perps. Should Sol just focus on spot? And he's like, no, I think we should do everything. What's your take?
I agree. I think the surface area is so big for perps. I mean, Hyperliquid's obviously done an incredible job. That's why they don't really need anyone like me. They're doing so well. But perps is such a big space. They've tokenized a lot of things like Korean equities, oil, gold, and that has probably been the reason why it's performing so well. It's actually not crypto specifically. But there's so many things you could tokenize and actually trade, like pre-IPO stocks, post-IPO stocks, Chinese stocks, power trading, GPU data feeds. Like, there's just a variety of things that haven't been done yet, and Solana could do it just as well as Hyperliquid. It's obviously different because Solana is not specifically made to be a perp chain.
Yeah.
But there's ways around it. Like with Spot, we're dominating quite well.
Yeah.
You've probably seen we are kind of spot trading on Solana is very tighter than on most centralized exchanges.
Yeah.
I think Solana at some point was the second most traded kind of venue for Solana after Binance. So if we did that, we could probably do perps.
Yeah. I mean, I think the DeFi ecosystem on Solana is also something that you're trying to build into a more kind of robust framework here. So there's this ongoing conversation right now. I want to talk about that perps thing. I think you gave a pretty clear answer. Santiago's from Parify and Inversion, he put out this post basically saying that the yields in DeFi are far too low for the risks.
Yeah.
And then Luca Prosperi from M0 kind of wrote this whole paper on it and analyzing Morpho Vault specifically, and just that they're about 200 or 400 bips too low for the smart contract risk that you're taking and other risks that you're taking on chain. And that we've kind of failed as an industry here because we've launched something that gives you lower rates than the risk-free rate. Then I kind of responded to Santi and I was like, look, man, in bear markets, the rates in crypto are prohibitively low because you're in a higher interest rate environment and you're in a really low speculative environment for on-chain conditions. No one's borrowing stables to go long right now. No one's borrowing stables to loop and to do all these other opportunities because there isn't much. Whereas in the bull, it's typically a lower risk-free rate environment, but a much higher on-chain yield environment because of the speculative nature, such that it's just a purely supply and demand dynamic. And so there's kind of this inverse relationship to on-chain yields to the risk-free rate in the world. But here we are right now kind of opining on why yields are too low and risks are too high. And we're kind of like shooting ourselves down saying that, we haven't accomplished anything here. Where do you stand on this?
Yeah, I followed that debate quite closely. For once, something interesting was happening on CT. It wasn't just brain rot. Now, Lucas is a very smart man. I'm no mathematician, but I guess I've spoken to a lot of OPs since I got back to work. And I think what the reality is, there's actually a lot of borrowing and lending going on in the space at the moment. It's just not happening on chain. There's huge amount of size going through the market. People lending Bitcoin, borrowing dollars, happening at billions of dollars in size. It's just not happening on chain. The reason is quite simple. First, the variable rate is not that attractive. More importantly, there's not enough size, basically. When I look at most lending protocols, there's capacity, but it's not too big. It's hundreds of millions of dollars, but a proper borrower with a lot of Bitcoin will want fixed term, will want to know exactly the size he's able to push through. He does not want rehypothecation of collateral, wants auto liquidation. So very often these guys want some form of compliance, because a lot of these smart contracts, they're just that. There's no legal wrapper around it. But someone could I could call someone up right now and they would say, I'm happy to borrow at 8% against $1 billion worth of Bitcoin, as long as there's a compliant setup with fixed terms. And it's just not happening at the moment. So that loan book is out there. It's just not happening on chain. I can go in detail why, but
Yeah. And I saw you tweet about it. You said that you're kind of working on a Bitcoin product. But why is that not happening on chain?
Yeah, I think the lack of legal setups is probably the big problem. And also a lot of this money, the borrowing demand, comes from two places. One is centralized exchanges. There isn't enough of a connect between, say, Binance and Bybit, Bitcoin holders who are able to borrow in size from DeFi. Coinbase and Morpho have done that very well, right? So Coinbase holders can kind of borrow against their Bitcoin. That has not materialized across different centralized exchanges. Those two kind of ecosystems are not connected yet. They could through DeFi. The second problem is there's a lot of Bitcoin that's in custodian accounts, like Anchorage, Zodias, Coppers.
Yeah.
And there has not yet been a proper connection between DeFi lending markets and these guys. Because most of the really big Bitcoin holders, they are keeping their money in custody. And there's a disconnect essentially, but that can be mended. That can be rectified quite easily, and I'm seeing this already on Solana.
Yeah. So do you think that people who are doing on-chain yield strategies right now are taking excessive risk compared to what they're getting?
Well, there's no such thing as excessive risk as long as they realize what they're doing, and I do think people that are doing this on chain at the moment are very smart people. Okay, that might be too much. I know these people, they're not very clever, but they know what they're doing, let's say. They have an understanding that we know we're borrowing at a variable rate. We know that utilization can spike. We can't withdraw at all times. They know that. It's not really retail doing it now. Yeah. So everyone's fine. Okay. The problem is there's actually billions of dollars of stable coins lying around wanting to be deployed. Ethereum is sitting on 6 billion. Spark is sitting on something similar. Yeah. There's guys like Bullish, etc., and they want to deploy. They just don't have high quality borrowers and borrowing capacity. And that's kind of where I think we could come in as an industry and just connect these custodians and centralized exchanges to DeFi, like Coinbase Morpho, but on a much bigger scale. That's the new unlock for DeFi, in my opinion.
Yeah, because I have a couple friends who work for some Bitcoin, like a loan book here, basically, and they do whale lending in a very custodial, off-chain, call me to change your margin or to sell or to borrow or shoot me a text type of environment. Yeah. And it's hundreds of millions of dollars, and they're not doing that on chain. They just have a a credit line from a bank or from an institution, and they just issue credit basically to these people completely off chain, completely through the fiat rails.
Yeah, but that can change. Like that legal structure could be taken on chain. It's the same way kind of Athena came in a few years ago and said, we're going to keep money in custody away from smart contract risk and delta hedge on centralized exchanges. Yeah. That was a key unlock. That was so easy to sell to LPs because money is kind of safe, right?
Yeah.
This would be the next step for lending. It will be very similar. Access money in custody accounts.
Right. But then bringing that on chain though.
Yeah. Yeah, like accepting stable coins on chain, let's say through a lending protocol like Camino. They're working on this basically. So you accept stable coins on Camino, but those dollars are being lent actually for a custodial setup to people who have Bitcoin in their custody. There's legal agreements and such. That's kind of where the space is going in my opinion.
Well, if you want to unlock all of that Bitcoin kind of like that's just latent demand sitting there, the thing that a lot of like the Bitcoin L2s and a lot of these protocols were trying to nail was like, how do we get people comfortable to like take their native Bitcoin, bring it on chain in some wrapper form or some identical form, and then use DeFi?
And that was bullshit, wasn't it? Yeah,
it didn't work out.
No, I mean, I think Celsius was the biggest user of wrapper in lending protocols, and they blew up. They were cowboy about it, but most guys want to keep their money in custody. That's just the reality of it. So we should come to them, not ask them to come to our bullshit layer 2, right?
Yeah. Okay. And so you guys think that there's and you're working on a product basically that's going to allow that to happen on Solana?
Yeah. Well, so people doing this are the Camino team. They are, I think, the first largest, one of the 2 largest lending protocols on Solana, and they have kind of cracked this, and they're rolling out of vault as we speak. There's $7 million now. They just rolled out, but they're going to try to scale this to about $1 billion soon. And it's just kind of new, so I'm trying to kind of break the new OPs into this. Be like, look, this is a complicated legal structure, so you have to look through it, do due diligence. But hopefully, this product can actually take off and will set the precedent. So that's one team that's doing it. There's other teams trying to do something similar, and I think we embrace this. As long as you bring the money, we should come to the money.
Yeah.
And we should not sit and wait for them to come to us, because why would they? We have variable rates.
Yeah.
We have rehypothecation. There's no legal agreements.
Yeah. So Athena recently, kind of new topic here. They came out and they were like, all right, look, we've redesigned our collateral backing.
Who, sorry?
Athena did.
Oh, right. Yeah.
You obviously know the basis trade quite well. And they are doing now new prime structures with basis trades on commodities, on equities, on RWA non-T-bill yield products. And basically are coming out and saying that the basis trade works really well in the bull cycles, will likely continue to do that. But in non-bull cycles, we need a more diversified collateral set, basically. Something that Sky is known and has kind of like executed on for a while. And those two have gone head to head. I've been notably bullish on Sky, but now that Athena's kind of put this back into the market, it's like, okay, they're thinking about it, I think, in the right way. They put a lot of work into it. Where do you think this goes, right? Because there's a lot of pushback on these stable coins are just hedge funds disguised as a stable coin, a strategy, a trading strategy, a highly sophisticated trading strategy, some may say. Where does this market end up? Like, do the Skies and the Athenas of the world have, what it takes, you think, to be like the hundreds of billions of dollars in terms of stable coins? And like, how do you see that progression? Because these two right now are best bets at like non-fiat stable coins. Like they're like a closest thing to a successful algorithmic stable coin. And they've done quite well. Where do we go from here? How do we kind of scale these things?
Yeah, the way I sort of see it is that, and that applies to the entire yield vertical. We are sort of selling high quality asset yield products based on crypto and Western kind of asset issuers like Biddle and stuff like that. And we're selling them to essentially the Asian kind of stablecoin holders who have a lot of size, cannot access these opportunities, but would like to. And that's why to them, 3% is better than nothing, as long as they can pull out the stablecoins at will, whenever they want to, right? So if you think of that, there's a huge amount of stables that will be injected into the system over the next few years as there's more capital controls in the world, as dollars seek a place to park their money at. And people like Athena and Spark, as time progresses, they'll know how to do it very well, and they already do. So we're just in the bear market.
Yeah, right.
Right. But long term, if you take the long view that the world is going to shit, there will be wars, and capital will have to flow somewhere. It will also need yield and people who can manage it. And that's where the growth will be. Can they attract that Chinese, Korean capital? That's another question, but I think they're well equipped to do. So if you believe in that, if you believe in capital flight, you will believe in yield products.
Yeah. Yeah. And as far as the backing goes, the more diversified approach from Athena signals longer term sustainability, yield.
Yeah, they have to. I mean, they have no choice. Spark and Athena have to diversify across away from per basis trades. It's just not viable now. But over collateralized Bitcoin loans they announced makes a lot of sense, right?
Yeah.
There's a lot of demand for that. There's size sitting in Swiss banks I'm aware of that just wants to borrow it kind of, again, at 7-8% fixed over 2 months to 12 months quite easily. So plenty of demand there. There's American products like BlackRock's high yield products that some of these guys cannot access, for example, or they don't want to do compliance, for instance. So there's so much stuff that you could do that is very legit, very blue chip, but would accommodate these guys in Asia. It doesn't have to just be Asia. It just happens to be the case they have capital controls. God forbid there's a civil war in America one day, and exactly the same thing will happen then. American capital will flee America, worst case, will seek a place to park it, and that will be the blockchains.
Yeah.
But we're not ready for that conversation yet.
I'm curious what made you choose to work with the Solana team and kind of what you saw there as a core driver of where you're going to take your kind of next step from a career perspective, right? Like Athena was obviously a big 0 to 1 in the stablecoin space. Solana's at a really interesting point where there's a lot of competition on the institutional front from Ethereum and these kind of permissioned chains, the cantons. We had some Ripple fanatics on earlier, and that was a hell of a conversation as well. And then you've got kind of competition on the perp side with the hyperliquids and the lighters. And on the trading side, obviously spot-wise, still dominating. Like, where do you see the next big kind of upside from the Solana? Like what can Solana provide to the world that will allow it to scale to the next, hundreds of billions of dollars of users, but also really just of market cap? Like what does that look like? Why'd you join?
Yeah, the reason I joined Solana was because I was self-destructing. I took a break. It was too long. I did nothing with my life. I was partying my tits off and fucking jumping off mountains. And I just met up with Lily, the head of Solana, 2 months ago in Dubai. And I was just kind of catching up. And I was like a child showing her mummy the stuff I used to do. Like, oh, look, I've been doing this and that. And she's like, you're self-destructing. Here's a job. Stop doing it. It was an act of mercy, really. And that was why I joined. It was just an act of mercy. And I was like, I do need a job, actually. And after speaking to people in the team, I was like, actually, I think they might be cooking something here. But it started with the sheer fact that I wasn't doing anything important with my life, really good with my life. So.
Yeah.
But why Solana specifically? So I think there's only two foundations or blockchains that know what they're doing.
Yeah.
And that's Hyperliquid, and they don't need my help. And there's Solana, and Solana's in the spot where if I come in and I provide some impact, I can own some of that, and I can learn something new. And this is why. Solana is very focused on trading, on payments, which is the core use case of crypto. They're very product-driven. They know exactly what brings revenue rather than wishy-washy, effective altruism bullshit. I'm not a charity person. I just don't give a shit about this. I really like stuff that creates revenue, makes money, grows, and I think Solana kind of knows what they're doing in that regard. That's why. But you wanted to get into specifics about certain things?
Yeah, just kind of like what you see being the core drivers now for the ecosystem, for the blockchain, right? Like obviously had this massive kind of token launching, trading meme coin-esque era. That era is behind us. Likely the speculation will return. But like, what is the future of Solana that you're trying to drive forward?
This is where creativity comes in, basically. It's about figuring it out by trying different things. There's a few things that I know would have demand. It's just about sourcing it. And I'm not saying this is happening necessarily. So on the perp side, we have capacity to create very compelling perp markets. Phoenix is working on something quite interesting. They're rolling out as we speak. They'll quote very tightly. They can roll out commodities, oil as well. They're going to be rolling out a bunch of different markets. So I think it's going to be quite competitive compared to Hyperliquid. So that's one vector. That is kind of like a given. You have to have competition there. I think what would be really cool is pre-IPO Chinese stocks. There's so much demand for getting into stuff like Unitree or Moonshot AI. There's SPVs being spun up everywhere. If someone could tokenize assets like this in size with core partners in Asia and take that on chain, we could do it today pretty much, or Meteora could, or whatever. But the question is finding these assets, which would be very hard. And these are one of those things that would be quite hard. There's a bunch of things that we're trying out and the protocols are trying out, but it's about seeing where the traction will really be once it happens. I suspect it's these things, stuff that you just can't get normally. Like if you're like an American guy, you can't get hold of these Chinese pre-IPO assets. Actually, no one can at this point. It's very hard. But if you did, it's like the biggest unlock ever. You could do penny stocks on chain. You can take listed Hong Kong equities in AI as well that are being like just ripping now, and no one can access them unless you got a Hong Kong license or some fancy broker. I'd love to trade like ZAI or Minimax, for example. They've been ripping from like $100 to 900 within 3 months. There's actually so much capital formation happening in TradFi that we're completely ignoring. And all it takes is a team that's just going to say, we're going to list this, we're going to market make, we're going to bring it on chain, and anyone in the world can buy it. This is, I think, where the growth is going to come from for Solana.
And what about the culture side? Do you think that the culture side has adapted to the more institutional era that we're in of this space? How does that happen?
Yeah, the foundation is well equipped to handle institutions. They have no problem there. But I do think it's important to note, that's just my opinion, that like Wall Street needs us more than we need Wall Street, because when they look at us, they don't see clients. They see, they see the stable coins that we have on chain, and these are potentially consumers of their yield products.
100%.
Like, we don't have to pander to the suits too much. They see us as the money bag. It's not the other way around. Surely, at some point, Wall Street ETFs could recycle their crypto assets like Bitcoin and stuff back into DeFi, but I see that as quite far-fetched at the moment. What they're really, really looking to do is go into DeFi, tokenize their high-yield private credit fund, sell it to people on the blockchain. So they'll come to us anyway. They're here. Our job is to attract more stablecoin volume, more stablecoin deposits, more trading volume, which is actually very crypto native and is not about servicing Wall Street. So yeah, I mean, we're well equipped to handle institutions, but I think personally, this is not where the real money is. The real money is like somewhere else.
In Asia.
In Asia.
Yeah.
Or enabling cross-border flows, stuff that a white guy wants to buy Chinese stocks. Why not? A Chinese person wants to buy American stocks or American assets. Let's make it happen,
Yeah.
Or protocols under Solana that would want to make that happen somehow in a way that is not dodgy or kind of brazen, but there's ways to do it,
Yeah. Do you think that Monad is competition to Solana?
Monad.
Or
what are they doing nowadays? I haven't checked.
Do you ever think about Monad?
I don't want to sound rude or anything, but I don't think about Monad much. Okay. I don't think about Ethereum much. I think about Ethereum a little bit because there's decent stablecoin demand that is very native to Ethereum, but Monad is probably the same LPs I already know. So in that regard, it's not something I think about yet. It could. So what are we doing nowadays? Is it like just yield farms, or do we do any trading stuff there?
It's kind of like the perps, trading, DeFi.
Oh, really? Should look into it. Fair enough.
Yeah.
I'm not dismissing them in any way. Just I've been thinking more about Ethereum native stablecoin holders, how to move them to Solana.
And why would they want to go to Solana, though? I mean, if I'm holding stablecoins on Ethereum, what I'm thinking to myself is I'm holding assets on the more bulletproof ledger? Why would I go to something less bulletproof?
Yeah, I think there's a very good point with lending protocols having to earn the right to host more stable coins because of security stuff.
Yeah.
But the reason people move is because first, there's high yielding opportunities at scale.
Yeah.
They could come from RWA, they can come from stocks, for example, that people want to actually use to borrow again. So you have to have a wider array of assets that are being used to borrow. Perhaps the custodian thing I discussed, I think, is a very key part here. Like if we can tap into that Bitcoin sitting in custody accounts who can directly kind of deploy in Solana, that's something Ethereum cannot do at the moment. A lot of borrowing demand essentially is what I'm trying to say. And that's something that we could bring through kind of different ways rather than just smart contracts. That's why. Because again, if I had 100 million bucks in Ethereum and I earn 3% now on Aave or Morpho on USDC, if someone told me you earn 7% fixed with compliance, no rehypothecation backed by Bitcoin, it's 7%. I mean, it looks pretty good.
Yeah, I mean, there's that protocol APYX doing STRC backed loans.
Oh yeah, that's another vector. Yeah.
Yeah.
So there's people doing tokenizing the MicroStrategy stretch product, which yields about 11%. There's 3 teams doing it that I'm aware of, APYX. There's Saturn guys. There's also Solstice guys.
Yeah.
So they're both trying to do the same thing. It's a good product. I mean, I think LPs quite like lending against that because they understand that it's Bitcoin, that it's microsailor. They know how to price it.
Right.
I think this could take off, but it's becoming commoditized at this point a bit, right? Everyone's trying to compete for that particular vector. But I do think it's a very valid asset, actually. There's probably going to be some instance of it.
Well, it's offering upwards of 10% on stables.
11% now.
11% on stablecoins.
Yeah. That's very solid given the fact that it's crypto native. So here's the thing about like lenders, the really big lenders, they are comfortable lending at lower yields as long as they understand how it's priced. And so you have RWA stuff like Apollo's private credit fund, which is a great product by all means, but these crypto guys with lots of stablecoins, they don't know how to price it. They don't know Apollo people. They don't know what's inside of it. But MicroStrategy, they get it. This is crypto. This is our kind of stomping grounds, right? So I do think it's a very valid product. It will probably be more successful than most RWA products out there. Is it APYX that's going to win Saturn or Solstice? I don't know.
I don't know. Yeah. So we did a conversation with Stani for their V4 launch, which is kind of the transition from a very like a single pool with individual risk per asset to a more. It's kind of like a step closer to vaults, right? With 3 pools, and there's a prime, a plus, and a third kind of tranche. It's almost like a risk tranched product, different types of assets in there. And then you've got Morpho, which is like all the way down to like vaults, hundreds and hundreds of vaults with individual curators, individual underwriters, and then originators of the loan themselves. Like not Morpho is the infrastructure, not the underwriter. Whereas Aave DAO is more of the underwriter for these. What do you think is going to win here? Like, which model do you think has sustainability longer term? Like, if you're thinking about different types of assets coming on chain, like, do you have a preference between the vault model and the kind of more pooled model?
Personally, I like the pool model more because that creates just deeper lending liquidity. As in a borrower can tap into a wider kind of source of capital for their size. I always felt like it's much easier to convince people to. I mean, you can do a separate vault by all means, and it's just a lot of work every single time to kind of bootstrap a vault with new liquidity in there. It's almost P2P. Like it's almost like someone has a product and we have to figure out, in theory, who would be lending exactly against that. And these people have to think about, is it worth lending into this vault or another vault? Which I know is the kind of the idea behind it, but it's nice when there's a big main vault or main market where you have very kind of deep lending liquidity where you can list most of your assets, and on the side have some more experimental vaults with Camino has Prime, for example, which is like an RWA asset. They have decent liquidity there, or they used to have like JLP, which was yielding 12%. So yeah, I like a hybrid a lot more. It's much easier to convince people to kind of lend into that directly, I think.
Yeah, and then if you heard this pushback, I'm curious what you would say. Paul from Morpho would say, sure, I understand that. But if you do this kind of DAO managed or single underwriter with a risk committee management thesis, if these things grow to tens and hundreds of billions and trillions of assets within these protocols, you're going to have a centrally managed credit facility for the entire world. Is that not the antithesis of what we're trying to do here? And so that would be the pushback on the pool model.
Obviously, a pool model has more risks if it blows up because it's much more systemic. But at the end of the day, this is crypto, this is DeFi. Smart contracts can get hacked. It's sad, but we have to just make sure they don't. I think you just have to take. I mean, I have nothing against Morpho. I use that product, but it's just it's okay to take responsibility. I quite liked when Mark Zeller was in charge of the V3 stuff we used to do at Athena, because we did create separate markets, but eventually we migrated it to the main market, and his approach was kind of like, we take responsibility, I guess. And thankfully, our V3 never got hacked. It was, I think, the reason why DeFi lending grew so much is because V3 never got hacked. People got more confident and more confident with that deployment. And yeah, that's just my thoughts. I have no fucking idea. I'll go wherever the money is, all right? But if I see that Morpho model's working out more, I'll be pushing for that too. But I do find it easy to convince people to put money in the main vault. In fact, the LPs are thinking, I'd rather accept kind of the risk of getting hacked, but being able to withdraw with ease my stable coins from a very big pool of capital, rather than it's very safe and segregated, but I can't withdraw because I'm the only lender in that vault.
So there was a rumor going around with regards to Aave V3 and Athena and 1010 that a specialized group, specifically a competitor to Athena, instigated a large selling of USDE in an effort to undermine Aave's protocol stability, and also potentially take two birds out with one stone with Aave and Athena both. And
was it Tarun? Just kidding. I don't know.
And so obviously this event happened, and Athena's USDE was hard coded on Aave to 1, right? On Aave V3, which kind of saved Aave in the on-chain environment. Binance had these other kind of like market making dynamics there. I'm just curious if you have any reflections from 1010 or.
Yeah, I mean, well, I was out of DeFi for some time, but then I looked at the phone. I'm like, oh my fucking God, why am I so poor now? It's annoying. And I looked into this, and obviously Aave has done exceptionally well during that time, because in Athena as well, Athena's TVL went from 15 billion to 7 billion within a few weeks. That's fucking crazy. Aave had a giant deleveraging event, all fine. Binance, on the other hand, had a huge issue because of the depegging and bad Oracle design, I suppose. I think it just proved DeFi kind of worked out. And every time a hack or something big like this happens, I'm kind of surprised, because we had this during Celsius, right? Aave did fine. Every time there's some really bad stuff happening, DeFi kind of wins. And I'm almost surprised at this point, because a lot of people in this industry are absolute idiots. But we're doing pretty well comparatively in the really stressful situations, I think. Not all the time, obviously. There's hacks here and there. But I think on the lending side of things, it's one of the most bullish sector in the space.
Curious how you're thinking about the dispersion in asset performance going forward. Obviously, we've seen hypes came off the lows quite well. I coined this term revenue meta, pretty silly one, but here we are a year and a half later, firmly valuing protocols based on revenues and kind of cash flows. Is there a particular thesis that you have, or a particular way that you're thinking about how this next era of the market is going to shape out from a asset performance perspective? Are we overemphasizing on revenues and on fundamentals? Is that pendulum going to swing back to more of this kind of network effect trade, or even like the meme trade? Kind of just generally, how are you positioned, and how are you thinking about the turnaround that's coming?
I think there's always bubbles. They always happen. Like in AI, these companies raising billions of dollars in
it's nuts.
valuation. They have no revenue, no chance of revenue. The founders are, I don't know, went to jail or something. Like I've seen a few of these decks. It's just, it's just bubble stuff.
Yeah.
They are experiencing a bubble. They haven't seen one in 20 years. That's why they think it's going to go on forever. We sit here being like, first time.
6 weeks.
Yeah, first time. So I think it's just a period of time where, yes, the market's bad. People are focusing on revenues because that's ultimately the only way to see is the project solid.
Yeah.
But it's not just about revenues. It's also about revenue growth and market expansion. Pump is making a lot of money on paper, but or in reality, but like the market's wondering, can they expand the market share from here, right?
Yeah.
What people think about Hyperliquid when they see the revenue, they're also thinking they can take on Binance, take on Bybit,
right?
Because it's in their minds a better product. They can take on gold and commodities, which means they can take on interactive brokers, fidelities and such. So it's about growing the market share aggressively. If you grow the market share really aggressively without any revenue, that's better than having a really significant revenue but without any market share or ability to grow market share. Because once you have it, you can figure out ways to monetize, right? Yeah. So I think it's really about projects that can grow market share in their vertical and beyond it. And that's why Hyperliquid was doing well. That whole price thing, Hyperliquid price bounced once Jeff talked about we have commodities and they have more than $1 billion or something in open interest. That's when the price bounced. Why? Right. It's not because they made so much money recently.
Yeah, it's just the way people were assessing it changed.
Yeah, it's like it's not just crypto now.
The whole story changed.
Yeah.
And that, like, the whole story for DeFi changed in that moment too, whether people have realized it or not.
Yeah.
For Camino, for Aave, for Morpho, for Jupiter, for Aerodrome, for Sky, for Spark, for Athena, the entire construct of we're building companies and protocols permissionlessly on chain for crypto assets only was completely shattered. Yeah. Because the reality is we're not building these products just for crypto assets. These products are going to be for tokenized versions of tons of different types of assets with hundreds of trillions of dollars of TAM, not I don't even know what the TVL and DeFi is, 100 billion maybe, $2-3 trillion in total assets of the market cap of the entire industry. So I think like that moment, HIP3 and that whole kind of tokenization wave that's now happening is like shattering people's perception of like what we're doing here. Yeah.
And that's the issue with the reason why dispersion is so high is because everyone suddenly realized that 99% of the teams have no idea how to grow beyond just crypto, beyond the classic C2 circle jerk. So Hyperliquid knows how to do this. I think Solana knows how to do this because Memecoin Pump.Fund showed it as well. Polymarket, Kalshi. There's reasons why the only companies that worked out have high valuations can actually tackle the space outside of the core DeFi CT ecosystem, right? Which everyone knows already, just no one's actually doing anything about it. Really.
Yeah.
Right.
So. Yeah. Last thing for you, I think let's say this tokenized asset thing keeps happening, right? We get trillions of dollars on chain of different assets, whether it be equities, T-bills, other RWA yield products. Who do you think wins the most here? Who benefits the most? Which company?
North Korea wins. Yeah. Fucking twats.
Fucking twats.
Yeah. No, I mean, I think stablecoin holders win. People who want to take their capital outside of the traditional financial system can access more and more opportunities to earn yield, to trade, to do what you can't do at the moment. And I think, people who would say, but buy fiat, mint Tether or USDC, these guys will win. And the ones that will lose will be banks, some governments. The traditional system will eventually kind of be squeezed out and the capital will flow into blockchains. I'm so idealistic. I have no idea I had this in me, but it just comes out naturally, really.
Well, man, hope you have a great rest of your time in New York, and congrats on the new role.
Thanks, man.
I think Solana's lucky to have you. I'm glad to see you back in the world.
See? It's best for legal. She's not sure about that.
Ladies and gentlemen, Seraphim closing us out from the Tokenization Tower, guys. We'll be back tomorrow at 12:30. Thanks for rocking with us. We'll see you guys then. Have a great day.
Cheers, guys. Cheers, man.